Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Oh, Joel's gone. I don't know where Joel went. Joel's here. I promise. Let's bring Joel off the screen for a second. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel. Okay, Joel's back, and now Dennis is here. Everyone's here now. Now it's a party. Welcome to the show. We got a good one for you today. Earnings parade continues. Buy the dip yesterday. We're going to talk IPOs with our first guest, Eric Krull, who's the author or co-author of the Lifecycle trade. He studies IPOs. He will join us at 8:35, and I'm talking to the CEO of LivePerson, Rob LoCascio. LPSN is your ticker. They had earnings last night. He'll be on the show at 9 o'clock. We had a lot of earnings last night. Activision, LYFT. We had GM this morning. So a lot to get to on that front. Go ahead and smash the like button for some earnings. We'll do ticker time. Smash the like button for ticker time. We'll try to get to as many of your questions today as we can, though we always seem to fail in that regard. But every day is a new day. Joel, how are we doing this morning?
We're doing good. We're doing good. Check your phone real quick. I sent you something I want to try and perhaps get on the screen here. S&Ps are trading in the green. Buy the dip. Works again. We're up 16.25 handles. Traded a little bit below the close, but then just caught a bid with some good earnings reports.
Show us your charts.
I'm showing you charts right now. You have crude. Up another 80 cents here at 66.49. You have gold just hanging out near 1,800, up $1 at 17.77. Silver, that's in the red by 16.3 cents at 25.38. And Bitcoin just hanging out in the 55,000 handle, up $690 at 55,209. Triple D, pretty much straight up in the after hours. How's it looking to you?
Yeah, again, though, you had to be selective. And what were we talking about yesterday was buying value on dips. And we had the dip in everything in the morning, and then the separation started in the afternoon. The tech, not so much of a rally. Everything rallied in the last 20 minutes, but you really saw the separation where value stocks started to rip all afternoon. The commodity stocks ripping all afternoon. I mean, this is the market that we're in where they're separating. I think growth is still a sell on rallies and value is a buy on dips. That's how I'm approaching this market. That worked very, very well yesterday.
Yeah, I was looking at the big tech and Apple, boom, down goes Apple, takes out that 131. I know Microsoft had some news that was weak, got under 250. Amazon, I mean, the world has forgot about earnings from Amazon. Obviously,
they didn't forget. They just what the market always wants something to look forward to. I mean, I'm all excited. I want something to look forward to. What are they looking forward to now? They had the good earnings. They had the buyback. They did everything they were supposed to do, and the market's like, okay, well, what am I looking forward to now? And they're selling them off. I still own my Amazon, still own my Apple. I'm not selling these stocks. I think eventually they find bids again, but right now, value is what's making my portfolio move up. It's the only thing making my portfolio move up. And I wish I had all value stocks. I don't know. Mitch, you were talking this morning too. I'm not sure if Mitch is there, but Mitch is starting to become a value guy here as well. I mean, this is the market. It's been 3 months. It could be 3 years of value. This could happen. The valuation's a gap, like we said before. Growth, ridiculously priced. Value was ridiculously cheap 3 months ago. It's come in a little bit. There's still a lot of value stocks that are very cheap. Now, again, I don't want to chase. You got to wait for pullbacks, but you get them. Yesterday morning, you got a dip in a lot of those value names. And then when they turn around, like US Steel, right in the morning, it dipped. It dipped hard. It opened up and then ran and then gave it all back. No one's to do all afternoon. Run. So they're looking at value right now.
Right back, yeah. U.S. Steel's coming up on a big level. Right when that news was announced, the pack 27.40. We're getting up there, folks. 30 cents away. That was first time up. We'll see how it reacts. It's come a long way since that low. Goodbye on that one, Triple D. The new core I saw was holding in there. That made a new all-time high. That had a strong day. STLD, Steel Dynamics. I'm sure the chart looks the same in that. Boom, new all-time high. What else do we have for value commodity stocks there? UPS. I mean, that's not a commodity stock, but look at that thing. Has UPS
just
ever marched like that?
Doesn't stop, Joel.
Man,
and that's now it's just gotten overdone. You can't this again. You got to look at what you're buying. If you're, and Kramer said last night, if you're buying, you've missed it. You need to have some type of a dip, although he did say buy a piece of it now, but, he feels like it does need a dip. I mean, you have. If you're coming in here now on UPS, you've missed it. I bought this stock back. This was when I bought back in June when I had the earnings dip at $100. I sold it like 120 because I thought it was a pretty good move, and I thought we were still in the Corona crisis. Never rebought it. Big mistake. Obviously, stock continues to run. Great company, cheap multiple, but you need a pullback now. And some of these value names, you do need a pullback. Don't chase the value names is what I'm trying to say. Right. I want to be long them, but I want to be long them on dips.
The dip, that was a nice dip yesterday. That certainly was. And just none giving it back this morning.
And you keep getting opportunities. Like people think if FOMO kicks in, you're like, I'm never going to get, there'll be another trade tomorrow. There's always another trade. You just got to wait for that opportunity. Sometimes these earnings reports are giving you opportunities. We've seen, like US Steel was a classic example where I was like, okay, here's, one that I wanted to own. I sold it. It was selling off on the earnings, which were okay. And, then it turns around on a dime. Like that one worked out perfectly. But there's opportunities. There's always an opportunity. Just kind of separate. Have your list. You got 100 stocks on your list? Separate them. Don't have all growth on your list. If you've got 100 growth names on your list, or all 100 SPACs or 100 tech stocks, you got to start learning how to trade other things. Because right now, those things are completely out of favor. And they might continue to stay out of favor because the valuations are all still nuts. So, you look at Teladoc, and the thing goes down every single day. Correctly called on this show. Hated it since 240. It's $158. At a certain point in time, it's oversold. I mean, I'm not saying come and short Teladoc now. The trade was a long time ago when Kathy was buying it at 240 and 220 and 200. That was the time to be selling it. I mean, she's still buying at $158, so she can average down and average down and average down, and maybe eventually comes back. But this is a gross story. This was the story of the lockdown. It's been cut in half. It's a 2-for-1 stock split now, and it's not only given back; it's given back 2/3 of the COVID run now. Like, this is a COVID stock. At $100, maybe Teladoc gets interesting, but again, you got to go look at valuation. You got to put on your CFA hat now. We're in a new market where valuation matters. I'm going to keep preaching you guys the same stuff every day because that's what's working.
Does everyone know when Dennis says CFA hat? Does everyone
They
know?
all know what a CFA.
They all know what they mean.
Chartered Financial Analyst. So this was, this is, it's from the CFA Institute. I have my CFA. I did it back in 2002. It's the valuation. This is how the company that that puts out analysts that value stocks, that sit there and do the homework. They crunch it all out. That stuff hasn't worked in 2019, 2020. 2020, it absolutely did not matter. It matters in 2021. Long-term valuation always matters. Short-term, we go into these crazy bubbles where nothing matters. Oh yeah, it's just story, it's hot. Always in the short term. So there's two, you got the short term and you got the long term. In the short term, the story is all that matters. But once the story cools off, it's valuation that matters. That's what's going to hold up the price. And if you're buying stocks at 50 times sales and the story cools off, fine to buy a stock at 50 times sales if it's got a hot story. But when the story cools off, you got to know, I got to go, because there is that huge gap between story and where real value is. And you're buying stocks 50 times sales can take a long time, even for growth stories, to grow into those earnings and to grow into those multiples. So, when we saw it back in the tech bubble burst, when Cisco was trading with a PE of 80 or 100 times, it never got back. Cisco never came back. Hodlers in Cisco, CSCO, never got their money back. Go and look at the long-term chart. You look at the chart of Cisco and you look at it for the last decade, and you're like, oh, it's been a really good stock. It's straight up from 20. The stock hit $80 in 2000. 21 years later, you're still down money. Why? Because you paid too high of a multiple and it never grew into it. Never, ever did. That is going to be a lot of these growth stocks. A lot of these growth stocks are never going to get back to where they were. Some of them might. A lot of them will not. And that's where, if you're in broken stocks, don't just think it has to come back. They don't have to do anything.
The 20-year history, I'm bummed here on TradeStation, because now the 20-year history only
they say it doesn't exist. Or it exists. They want to go back 20 years. It was 21 years ago I made the high.
Go back.
Yeah.
Wait, I thought CFA stood for can't find acquisitions or something. I thought it was a SPAC term. No?
No.
All right.
Chartered Financial Analyst. I hope that was a joke, but Chartered Financial Analyst.
I think it was. Was it, Spencer?
Can't find alpha. That's what I meant to say. Can't
find alpha.
Yeah, that's better. All right.
We got the drop there. Do we got wah, wah, wah?
Yeah, actually, we do. Sorry. I could do it to myself.
Earnings. We want to do any earnings?
Yeah. But before we do that, I just want to go very briefly into Doge, only because is this like the SNL trade? Elon is hosting SNL this week. Doge is running into that, and I'll bring up I'll bring up my chart here so you can see the chart of Doge, and then we'll get to the serious stuff after that. But but Doge,
the classic run up, we talked about this.
We did. We talked.
I didn't put it on because I just didn't want to buy nonsense. But if I was a crypto trader, I'd probably be long Dogecoin right now. Yeah. It probably has its topping event. So be careful. You're getting to the point, where it's probably going to run into the event. Maybe we even had a buck. Maybe it just gets crazy and goes to a buck on the Saturday Night Live thing. And then that's probably the topping event. We see this all the time. The run up into the event, and then the capitulation. Everybody comes in Monday morning. The last, Johnny come latelys come in I saw a talk with this Dogecoin on Saturday Night Live. I want to buy that. And that's the top. So I predict that Dogecoin will make its 2021 high. I'm predicting right now that it will make its 2021 high within the next week. So Friday, Saturday, because it trades over the weekend, Sunday, Monday, Tuesday. So I'm saying between now and next Tuesday, Dogecoin will make its 2021 high and maybe never see those levels again. So if you're in Dogecoin, I would get the hell out this weekend. You're all over it. Great job. The Saturday Night Live event is the event that is running this thing. And, it's going to get some of that. But if you think it's going to keep taking off after that, history shows, doesn't have to do anything. Maybe it does continue to run, but history shows that these things like to top out when mass media is, all of a sudden aware of it. They're going to be aware of it Saturday night when Elon Musk comes on and pumps the doggy coin. I wouldn't be surprised if it tops out Monday.
There'll be a skit or two, huh? I'm sure focused.
I'm sure there will be.
All right, well, market timing. That's what it's all about. Yeah, it's
Okay.
Real Big D, mate. Does anybody watch Saturday Night Live anymore? That was
apparently because they're running it.
This is the thing about SNL. Everybody says that the SNL that they grew up with was the best SNL.
It was.
Right, and that's true for everybody. Every generation.
No, it's only true for us.
Okay.
Come on, with Will Ferrell. You think about how many Belushi. Think about how many Adam Sandler gang.
Bill Murray. Gilda Radner.
Are we talking about the 70s or versus the 90s? I don't know. Wait, and then before we go to the earnings, though, Joel, what is this picture that you sent me?
You don't recognize that picture?
Well, I'm gonna bring it up here, but I want you to.
Dennis will know. I've showed this one before. Well, I've shown too many pictures.
I don't think you have.
Who is that? I don't think Joel's in any of those people's bellies.
Who's that dashing young man on the left?
Is that Mr. Elconin?
Yep.
What are you doing with your what's this face? You were a punk, man.
I don't know.
Punk face he's got in the pit.
Yep.
Making fun of the punk kid, the runner. That's the runner right there.
No, I was clerking there.
But you're clerking there.
Well, the CME is closing down the pits except for the euro dollars. Did you see that news, Dennis?
Yeah, I know.
Yeah.
That's horrible.
But look at that's my buddy Steve Reed. I haven't talked to him in a while. He went to University of Hawaii and he came to work in the pits. But look at the guy on the left, Pat Skeleton. Oh, I used to call him Red.
He's going like this.
The guy.
Yeah.
He just lost all his money. What happened?
Well, he's a clerk, so he's not. He had just had it. I mean, it's either buy 50, like someone wants to buy 50 at the market, or he has like a big problem. Yep. So I don't know, man. I was probably.
Where'd you pull this one out of?
Well, you're not allowed to take pictures on the floor.
Yeah.
But this girl, I think it was Kathy Mooney that took this picture, and then I got it, and I've just had it for a while. So that was and then this I'll show this too. I didn't send this to Spencer. What you all know what this is, right? I saw this on Twitter.
Trade ticket.
Yes, it's a trade card. I still got a lot, man. When I knew I was moving out of Chicago and leaving, buy and then there's sell. I just started grabbing a stack of these things every day. I still got a big box of them, and then I just kind of keep my money in it now. So, and it's good to write notes on. But the only reason I wanted to bring that up is because the Merc closed down the pits on the day, when the world shut down, and then now they're going to they're going to close everything except for I don't know why they're keeping the euro dollar options open, but that's what they're doing. But that's an old one, man. That's from
the S&P futures pits are going to
they're going to after the September contract they're going to delist. That was at the Merc. That was at the CME.
Yeah.
That was at the side of the S&P 500 pit. And then there's also, and I brought it into the office, but I have one when the pit was just packed and crowded, and it was on a cover of Business Week, and it was from the top. I don't know. There must have been. And you could see me quoting in that, but I don't even know where that's at. That was from 100 years ago. But anyways.
Yeah. Chad's making fun of your buddy Steve for all his different colored pens, but the ADP number just came through. I don't know if you care about that. Lighter than expected on jobs. I
was supposed to go wide on that, Joel. I didn't even move.
I'm sorry.
Lucky I didn't go buy, bought, or sold.
Yeah, no, not really. There you see the number on the screen: 742,000 versus 810,000 estimate. So we'll be watching for Friday.
Yeah, Friday's a big number.
Watching for Friday. All right. Let's do some earnings, shall we?
Oh, sure. Eventually, we need to do that.
Eventually. We could do GM. We could do Activision. We could do LYFT. Where do you want to start?
Oh, man. Let's go General Motors.
Hey, that was out.
I own shares. I've sold puts. Stocks up. Value name kind of fits the bill.
GM was out this morning. Their Q1 earnings per share, very nice, $2.03 versus a. Let me bring the chart up there. Versus a $1.04 estimate. Sales 32.7 versus 32.6 billion. So a beat and a beat in the first quarter. They gave some EPS guidance for the year. That was a little bit light. It was in the mid to high $4 range versus a $5.24 estimate. They gave some net income guidance for the year as well. What else did they say? Preparing to launch a redesigned Chevy Bolt EV this summer. Talking about this impact from the semiconductor shortage, which we know already. Yeah, that's kind of it.
Kind of no man's land, huh, Dennis? Here you spiked up over 57.50. I don't know. I'll just give you one more target over this pre-market high because we seem to be pressing up against the upper end of the range. And it's actually just going back to Monday's high. If you want another target on the upside, 58.34, up a couple sticks. That's probably like the average daily range in the thing. So I don't know. If you want to try and buy it on a dip, the top of yesterday's range, that's not too far away. Let's call 56.59 support, 58.34. Resistance.
But this is not a dip. This is a rip. I own GM. I would be, yesterday was a good opportunity. Nice that support 55, and now it's ripping out.
Big support at 55.
Fade trade 55 is big support. So we'll see if that can hold. I mean, some of these stocks are not looking that great on the chart either. I mean, Ford doesn't look healthy either. I'm still long both of these though. It's just a matter of whether the rotation comes back and breaks them out again. I'm not a big pattern. I'm not a big chartist. I'm a big person for sentiment relationships. Ooh. I think value is still in favor.
The chips didn't hurt them, huh?
No.
Yeah, it did.
They did.
It did.
Just not as much.
Well, it's just that like everyone's being hurt the same, right? So it's like, Ford said there's going to be 1.5 million fewer vehicles that they're making this quarter this year than GM is also in that ballpark. What about Activision here this morning?
Yeah, street leaning the wrong way
Big
into this
wrong
one.
Way. Wow.
Retro.
Very interesting action after the numbers came out last night. So the EPS was good. Well, it was confusing because they gave GAAP and non-GAAP numbers because there was some sort of GAAP deferral there. So the EPS is confusing. Sales was good though. Sales came in higher, and they issued Q2 guidance, which you don't see too often these days. Not every company issues guidance. A lot of them cop out, say, it's too hard to tell, impacts of COVID, we can't really say for sure. No, they gave some good guidance, and they said Call of Duty is crushing it for them.
This looks like a flat-out sell to me. Just because the stock was breaking down, the chart was ugly, you're coming back into the whole 95 resistance area, and people are buying it up to that. If you're buying it at 95, you're absolutely doing it backwards. This is also still a lockdown play, and we're going to reopening no matter what they say. Yes, I still like video gamers long term, but I think if you're trading this thing, I think it's a gift overnight. I'd sell it. That's my opinion on it.
Yeah, I'm not gonna.
I don't own it, but if I did, I'd sell it.
What's interesting about this one, I mean, obviously the street was leaning a little short into the report, and you could tell it was weak. But I think yesterday what you had a dynamic was, I think your pattern traders got, your momentum traders got on it, and it took out 91. And that was like 1, 2, 3, 4, 5 lows in a row. And it was just like, okay, man, market spoos are going down. This just took out a quintuplet bottom. I'm pounding this thing. And they did. And it was hard, bounced a little bit at the end of the day. I mean, you got to what? 94.80. But look at this high right here. I mean, if this is not a sell zone, that was 94.86. So you've leaked a buck off it. I think you find sellers in the 90, here, 94 handle. It takes out the pre-market high. But a lot of people getting their money back today.
Oh, yeah. And they'll be looking to get their money back by taking in the cash and buying doggy coin.
That's exactly right.
What about the sympathy plays to EA, to Take-Two?
Not seeing much.
Interesting.
You would think, like I thought that too, and I did go long a couple of these stocks just for sympathy last night, and I still have a low position. But you're not seeing much of a sympathy move here, so I'm actually surprised by that. The two I own in the long-term portfolio is still Zynga, which had a pretty big sell-off yesterday. This stock, I guess I should be trading it because every time it comes back down to 9 or 10, it's a buy, and every time it gets back up to 11, it's a sell. I've just been holding through the whole thing, so I'm like, oh, I'm doing really well, and then I suck again. Oh, I'm doing well, and then I suck again. So, I mean, I guess this is just a trading market. You got to take the gains while you got them, and this has been a play where if you're buying in the 9s, selling in the 11s, you've been doing it right. I also own Take Two. Chart not looking great on this one either. I think I'd be a seller of rallies and Take Two, but I've got it in there long term. I bought this at $100, and I've stuck it in the retirement account. I think I just want some gaming exposure, so I'm sticking with it. But as a trade, I think I'd be a seller of rallies. Talking against my book again, the only person that does that.
And we love you for it. What about Zillow? I saw someone in chat mention Zillow. Let's take a look at that report from last night. This is my favorite app, quite frankly, the app that I'm on the most, just to browse and waste time on and look at all the houses I'll never buy. No, it's the truth. There is that SNL skit that from like a month or so ago that like I felt personally attacked from that skit. Anyway, the numbers from Zillow, EPS 21 cents versus 24 cents, revenue 1.21 versus 1.1 billion. This has to be like borderline best case market for a company like Zillow right if they're not crushing it now, then like when are they going to crush it?
You've got so many people caught in this thing now. It went full March 2000, bubble burst, and now we're having the repercussions afterwards, and it has been ugly. 212 down to 120, 100 points down, about 45% off. You can say, oh, it looks cheap here now, but this stock was, well, we shouldn't look at where it was in March because everything got hit. But before the COVID crisis started, the stock was $50. So obviously, you're down in the 50, 75. There's lots of support down there. It's a long ways down. Do we eventually see $100 on this? I think so. So I think I'd be a fader of the rally here too. Valuation's crazy, I believe. I haven't looked specifically at it, but I don't think it's a cheap stock by any means. How much money they make this quarter?
21 cents per share.
It's $1. So I don't know. So maybe they're making $1. It's 100 times earnings. I don't know. Maybe there's some seasonality effects in there, but it's not cheap by any means. This is not a value stock, so it's not the kind of stock I'm looking to buy on dips. I'm only buying value stocks on dips, and I'm selling growth and high multiple on dips.
It is record revenue for whatever that's worth. It was their highest revenue in their company's history. So
it's good. Yeah, I know they're firing, but it's just the valuation. It's expensive. Yeah, $31 billion company.
6 down days in a row. And due to break that streak, perhaps traded up. Hold on, boy, this is really no man's land because you leaked pretty bad off the headline, 28.48. So you're $3 off that. So you're going to find some sellers ahead of that. Not even your 2-day high. Your 2-day high is 131.40. I think I just have to give a definite pass on this one.
LYFT seems like they're recovering. They lost 35 cents per share versus a 53-cent loss estimate. Revenue of $609 million versus a $558 million estimate. So they beat on the EPS, beat on the revenue. Active riders, 13.5 million active riders last quarter, which was a little bit above where FactSet was expecting. And revenue per active rider also a smidge above their estimate as well. So it looks like they're getting there. They're getting there. They're coming out of it.
Bag holders from 60 to 65. As you get close to 60, I would expect to find resistance. Did we hit 60 after hours?
Yeah, we did. We just just nicked it. Well, actually 60, 64.
Yeah, so you went through 60. Anybody buying this above 60 gives 0 to technical analysis because this is just bag holder central from 60 to 65. So it's going to be tough sledding to get back up there. You got a big 3 months of people or 2 months of people buying it up there. And they're like, oh, I'm down. I want my money back because nobody sells at a loss. And, you get back up in the 60s, you got lots of people willing to sell because they want to get their money back. So I think as they get to 60, it's trouble. I'm not buying rips. Don't get paid to buy rips. Not in this market.
You got a long ways to go to get to the top of yesterday's range at 56.49. So if you're looking to, if you're looking to buy this on the dip, I mean, who knows where it could go? Another very tough chart. Just a slow leak off this 58.84. So we'll see. Is there any daily highs here to lean on? No, I'd say this thing better hold 58. 58.05 was Friday's high. So under 58, I think you get a look at the top of Tuesday's range, 56.49.
All right, I've got it for you. A value stock that went on a huge run last year into this year, is well off its highs, still a value stock, and is up a lot this morning on earnings.
Well, the up on the makes me not want to buy. What is it?
Tupperware.
Okay. Why I grunt and I groan is I actually bought this at the close.
Oh,
yeah, I bought 2402 because
and
I
you
thought
sold
to myself, yeah, I know. I thought to myself, I'm like, okay, I think Tupperware's going to beat. And then I'm like, I'm looking at it and looking at it and looking at it, and I sold it last night. I didn't want to take it through. I talked myself out of it, taking it through the report, and it does beat. And you know what? It was value in it, or to a certain extent, and it is kind of the play that everybody's staying at home, and they're like Tupperware. I mean, this has been and what is that? Who's that person my wife follows? It's that's the reorganization person, the girl that's into the whole reorganization cabinetry, and this is why we
Martha
also saw
Stewart?
the container stores take off.
That's a whole like genre on like social media.
TCS took off. Somebody in the chat's gonna have her name. My wife will kill me for not knowing her name. But anyways,
Rachel Ray.
No, Marie Kondo.
Marie Kondo. Yeah. They're all.
Oh yeah.
Paul, thank you, Marie Kondo. I mean, we saw the container store take off. I think Tupperware is part of that too. I really do. Organizing in your cabinetry, organizing with Tupperware. So I don't know if that's why the stock was up, but I had that in the back of my mind too when I bought it last night at the close of 2402. And somehow I did not take this through the report. I should have taken this through the report. Stupid. Very, very smart to get in, and then I talked myself out of it.
Trading up. Yeah, hey, it's trading up. It's trading up near the highs that just backed off a little bit. So let's look to file through this pre-market high of 26.95. As always, if you don't get through that pre-market high, you got a chance of the fade. But look at the sellers lined up at 28. If it happens to get there, you had 4 highs right over that region back in March, and then you had another 5 highs right there. So longer to see if it can run another buck. This was an at the close favorite. I can't remember who it was, and I know Andrew Garver talked about it, but someone like every day they asked about Tupperware, and I'm like, well, the chart looks okay. And then it topped out on the monthlies. Look at that. Gave you a lot of shots to get out there at 38.50. I don't know. People are going out to eat now. They're not all cooking at home. They don't have the leftovers. They don't need the Tupperware. So I think it was a stay-at-home play.
Yeah, it is, and maybe you do fade it for that reason. I just felt like they were going to have a good quarter. I screwed up. Mad at myself.
All right.
Next.
They're talking about SunPower in the Benzinga.com chat. They out this morning. It's a beat, but it's also a growth stock. So
just hated.
So
I kept that small piece of SunPower. I bought this at $6. I bought the stock at $6. I sold 80% of the position at 51. Kept 20% of the position, still way up in it, 6 to 22. And I bought this in June or July of last year. I was like, that's a pretty good 52. But when it got to 51, you feel like it's almost a loser at this point. I guess you just got to sell the whole thing and never keep a piece. I got that Jason Raznick in my head. It's like, I keep a piece. He never sells everything. He just sells like 10%. He sells 20%.
Wow.
So I said, keep a piece of this one too. And it's now at $22. I'm like, why did I keep a piece of this? I should have sold the whole damn thing. But anyways, it got just loony. It got crazy town. 6 to 51, 6 to 50. Well, anyway, I
went higher
57.
Than that. Yeah,
it went up 1,000% in like 9 months. All the easy money was made. Now it's all easy losses.
Maybe hold out for 2007.
I don't know what I'm doing.
That was your
I
guy.
bought it $6 the other shares. I'm probably gone this far with it now. I'm probably holding it now. You gotta have some growth. I like solar. I still like solar. I bought First Solar, which obviously was a good buy, and now it's a bad buy. I bought it right here at 74. Went to 90 almost immediately. Like 5 days later, I felt like a genius. Now I feel like a loser because I didn't sell again too. I guess this market, you just got to take the gains when you got them, or the market will take them for you.
Wow. And just looking at that SPWR, I mean, there's a seller. I mean, there's someone just, well, you got to start to show a little bit.
Way oversold.
Yeah, it's oversold. 2201 pre-market low. I got nothing on the monthlies for you until 20, but keep an eye on that pre-market low. See if you can find some daily lows. That's really not too long ago. This was back in December. Holy mackerel. That was a run. What do you got? Oh, yeah. All these lows here in this area. I just don't think it's going to chop through that. Actually, the lows go up from 20 to 21. So we'll see if it can stem the tide today. S&P's popped up to 79. Absolutely no relevant number up there. And we backed off 6 handles. So nice pop here. A little bit of a fade going into the just after 8:30 here. I don't know if there was any imbalances or not that maybe did that. But no, Joel's still calling the S&P 4200 top. Well, it looked a hell of a lot better yesterday than it did today. We'll see. I mean, that's a big level. You got your close up there. You got your high from Monday. So we'll see. Straight up, but 60 handles off that low from yesterday. We'll see if it holds today.
I like that old saying from D. Ridge: sell when you can, not when you have to.
Just like borrow money. Borrow money when you need to, not when you have to.
Okay. I made lots of sense.
Sure, that's not it. Okay, let's do one more before Eric Krull. Let's do Match Group, MTCH. This is a reopening trade if I've ever heard one before. They had earnings out, and the EPS 57 cents per share on a 40-cent estimate. Revenue also beat 667 million. Good thing it wasn't 666 versus 650 million. So they beat on the top and the bottom line. Tinder users higher, average revenue per user higher. Again, this is a reopening trade to me.
You know what? I mean, they already got this for me figured out. I'm selling all these growth names into these rallies. This is a gift day. I mean, you got to take the gifts when you got them. So 150 above this, everybody's going to be trying to sell this thing. I think. Is it going right back to 160 after you just have 4 days of massive bag holders in there? I don't think so. I think they're going to be trying to sell. So I'd go yesterday's high, 148.25. Oh my goodness, that's where it topped out after hours. Joel, your levels work, man. I'm telling you, this Joel Elconin where he just goes daily highs and daily lows. I hadn't even looked at the after hours chart, and I just looked at it on the screen. I was like, that coincides perfectly with yesterday's high. So a major resistance there, and then you get into the 150 psychological. It's a good short up there, in my opinion.
Look at the monthly to
150, good short.
Oh, look at the monthly.
That's my opinion.
Here. Oh, look at the monthly too. I mean, it's the monthly highs. It's got a lot of work to do. Look at that pre-market high, 40, as Dennis mentioned, and then, man, you know what was really nice yesterday too? If you were quick on this, 48.23 was the low. And it got up over that. It got up even over the close. It barely got over that low, 48.25. So we'll see. Big pop. Let's see if people want to ring the register on it. How's ATVI doing? That was Dennis, you were pretty emphatic about that. Still hanging in there. Well, buyer's not giving up yet.
Wow, it's only been 20 minutes since we talked about it. It's not going to roll over immediately.
No, okay. All right. What do we want? Is Eric in the background yet? Top IPOs, SPACs?
Not yet, but I'm going to keep going.
Go.
GWS is on in the .com chat is on the same wavelength as Dennis this morning, because Dennis, when we first came on, asked if it was when are we buying Maxar, and GWS is asking about that. So Maxar earnings, we didn't talk about it. It was they had earnings Monday afternoon. Stock got hammered, and now what? Now what do you do?
What were the earnings? Just make any money at all?
No, they're getting wait.
Oh
Don't call me on that. They lost money last quarter. Revenue $392 million was unchanged from the prior quarter. I'm sorry, that's not the case. Revenue was down quarter over quarter? What about year over year?
Mess.
Revenue was up slightly year over year. Nothing to write home about. But they missed the estimates for the top line.
It's a space play, but that stuff is all massively out of favor right now. Massively out of favor. I know space had a nice rally yesterday on a headline, but I think that the stuff's all out of favor. I'm out until we start to see sentiment turn towards growth. Right now, it's still ugly. Valuation is not attractive. $20. I know people don't want to hear it's 28, but $20 is where you topped out in the beginning of January 2020, and then you broke out from there. Huge support down at 20. That's 9 points down from here. It's a long ways down, but I don't see anything in here at 29, so I'm not going to try to catch the falling knife. I might try to catch it if it got down to 20. That's not happening anytime soon, but this type of market, a few weeks go by, growth stays out of favor, you never know. So, but right here at 29, no, I'm not buying, even though I kind of love the story of space, and this is a space play, completely out of favor right now.
You can lean on yesterday if you're so inclined. Lean on yesterday's low at 27.86, big volume day. So maybe you got everybody out of the pool that wants out of the pool, but your next monthly low, oh boy, is another $1.50 lower, 26.29. But little bounce off the low. Maybe look at the right side. Maybe a hold here for a couple days, and then maybe try and turn up. But only number is yesterday's low.
Mr. Israel,
Spencer,
I was answering.
Still waiting for Eric.
I was answering Eric Krull on the phone. He's going to be on with us in just a second.
Okay,
yeah.
Jumping over. We do have a lot of companies reporting tonight, and we are getting people chanting for PayPal, so maybe we should preview PYPL. It's weak into the report. It's getting a little pop here this morning, with growth getting a little bit of a relief pop. It kind of feels like a bit of a dead cat bounce. PayPal still a growth name. Love the story. Again, the storied stocks, the high value stuff is not in favor right now, though. So could it pop on the earnings? If it did, I'd probably be a seller. So it's tough. It's not the kind of stock I want to buy right now.
Oh, man, 2 monthly lows, 45.70 and 46.65. 246 must hold long-term level in PayPal.
All right, Eric Krull is here with us. I'm going to bring him on right now. He is the founder of Krull Asset Management, co-author of the Lifecycle trade. Eric, good morning. How are we doing?
Hey, good morning, guys. How are you?
Doing well. Good to see you. Good to hear from you. I feel like the last time we spoke, I don't even remember if we talked about SPACs, but I guess in terms of quantity, SPACs are the new IPOs this year because they're out raising IPOs.
Yeah, the last time we spoke was December, and SPACs were popular, but still didn't seem to overshadow IPOs, but now they do.
I'm going to bring up some slides you have prepared for us here that sort of give us some numbers on this trend. It's sort of mind blowing here, just in terms of proceeds raised and quantity. But as you mentioned, and as we've mentioned ad nauseum on the show, SPACs are, at least for now, out of favor.
Yes, I mean, if you go back just a couple of years ago, there, and I don't even remember hearing the word SPAC like 2 years ago now. There were only 59 SPACs, but now this year alone already 311 SPACs have IPO'd. There's only been 114 traditional IPOs thus far. And when you look at the far right, you can see that in terms of the total capital raised, SPACs have raised 62% of all the total capital when you combine the SPACs plus the IPO. So they're already more than half. And it's just been crazy.
All right, let's talk about some SPACs that maybe haven't gotten killed. I look at this table. I see UTS is not off its highs. I see Simple not really off its highs. VRT not really off its highs.
Right.
But I'm cherry picking here because the vast majority of them are well off their highs.
Yeah, exactly. And I'm sure you've been talking about this for weeks and months, that the vast majority of SPACs, they have this pattern similar to an IPO where they have this quick advance and then they come down. It's like basically a cone shape. And look at how many are way off their highs. I mean, like if you consider the market is considered in a correction when it's 20% off its highs, look how many SPACs are not only in a correction but way into a total bear for these stocks.
This is kind of crazy. You sent this over. We talk about like oversupply. And I'm just gonna go past that. And so look at this. So even if there are no more SPACs that IPO, let's say there's like a halt of new SPACs, we've still got so many of them out there, pre-IPO and post-IPO that are pre-merger, that like there can't be that many good companies available to buy.
Exactly. I mean, if you look at the top, the first line, there's 133 that have merger agreements that are not yet approved. Okay, that's one thing. But then you have 355 looking for mergers, and another 241 that are going to, these SPACs are going to IPO at $10 a share at some point. There's going to be roughly 600 SPACs looking for merger partners.
Wow.
I mean, that's just crazy. And so when you talk about how the prices that are out there, 2 years ago, we were talking about Uber and Lyft and maybe Moderna and Palantir and Pinterest. Those were the unicorns. Those were the best valued companies that were private. Those are gone. They IPO'd. Now you've had 133 already SPACs already announced mergers. Those are gone. What's left? What kind of companies out there that these 600 are going to be looking for? What are they going to be picking from? I mean, the leftovers, right? So you're looking at when you have a lot of demand for new companies to merge with and a lot of supply of money, they're going to be overpaying, because I think the best merger candidates are taken and they're driving up purchase prices. And then once they announce their merger, what will happen? There's usually some great excitement the day they announce the merger, and then that general decay that just keeps coming on down after that, because I think they overpay.
And this is the problem that Warren Buffett was talking about on the weekend at the Berkshire meeting, is that there's just so many of these SPACs out there. And he's like, he didn't like that they got the 2-year window only. What Buffett said was, if I only had 2 years to do a deal, and then the competition is intense, he's like, I'd get a lot of bad deals. So he's like, they got the time crunch, and then it's so competitive. I mean, like you say, with 500 or 600 companies looking for mergers, and the odds, this is a seller's market for all of these. These are the buyers, and this is a seller's market for all of these private companies. So they're going to be multiple people competing for them. So they're probably not getting great deals. I mean, that's really what started this. If we go back even on CCIV on the Lucid deal, the pricing on it was just not good. And that's really where they hammered that stock. And that was really where the SPAC started to implode. It's like, man, this is the best one. And this is getting hammered because they had to way overpay to get it. So that's maybe a major issue here.
And they also, the people who put their private money in the SPAC before the IPO, they have an incentive to get the deal because they're getting 10x off their initial investment. So they, despite the fact that there aren't that many great deals or great companies out there, they want to get their money back and they want to make 10x. So they're looking for deals. They're happy to make a merger announcement. They get their 10x on the original capital, and then everybody else who buys it after that, they're screwed.
I want to go to these two. I want to move on from SPACs if I can and go back to IPOs, because there are these two charts here that I think are very interesting. So this first one shows, I guess, that we are in a very, very hot market right now, that people are very willing to buy up or bid up these IPOs after the fact.
Relatively. I always take this chart with a grain of salt. I bring this up most of the times I come on the show. If you look at it, from 1982 to 2017, when we did our study, only 1.3% of all stocks doubled within their first 4 weeks after the IPO. And I'm talking from the day one close price. And now it's at 2.9%. So, okay, well, that's twice as much as it used to be, but it still means that like almost 97% of IPOs don't double in their first 4 weeks. So most IPOs don't make quick gains. And if you look at 13 weeks, there's 12.4% have doubled in the last year and a half here in their first 13 weeks, when it used to be only 6%. But again, if you think, all IPOs are great, I better buy them on day one because they always double. Like, no, even now you're still looking at 87% don't double within the first 13 weeks. So it's more than it used to be, but it's still not great. The odds are not in your favor if you buy early.
But this is the money one right here, I think. This is what
Yeah.
this is what Joel and I reference frequently is this idea that if you just wait a little bit, you're more than likely to get a better price.
81%. So give us the stats. That's just mind-boggling too.
I think people just don't realize that if you just wait a little bit, you're going to probably get a better price, because most of them undercut their day one low price within 3 weeks, almost 60%, and 81%, within the first 3 quarters. So,
Wow.
And I'm sure it'd be interesting to be able to look at some SPAC data just like this. But SPAC data is hard to get. I mean, they all IPO at 10 roughly. But the real number is, what is the price after they announce some deal? And then where does it go from that closing price of the day they announced the deal? And those are hard. That's data that's hard to find.
But basically just saying, to sum it up, 4 out of 5 IPOs undercut their day one price within 39 weeks. So basically you're only getting 1 out of 5. So if you're buying on day one, there's an 81% chance you'll be able to buy it cheaper within the first 39 weeks. So the moral of the story is the odds are against you if you're buying on day one.
Exactly. The moral of the story is wait for the stock to establish a pattern, some sort of base, and then you buy later on.
Do you have any favorite IPOs? Maybe I can go here. Do you have any favorites right now?
No, frankly, no. Most of them are not performing very well. I mean, growth stocks in general have been doing poorly since the end of February, and IPOs have not done that well either. There's a few out there that I'm watching. I'm waiting for them to form some patterns, but I'm watching FOUR. I'm watching Palantir still, Corsair Gaming. I'll admit in a few of those I've tried to take positions and then gotten shaken out. So they've been choppy, and it's just not been a great market for growth stocks really that much in the last really 8 to 12 weeks.
Do you see it turning eventually? And I've been talking and trashing growth here for the last month, and I continue to trash it. But at a certain point in time, some of these stocks are definitely oversold. I mean, from a valuation perspective, I keep saying a lot of them are still trading at lofty valuations. But I mean, you look at some of these, and like a Teladoc has been 2 for 1. It's been cut in half from where it was a month and a half ago. I mean, at a certain point in time, aren't we due for some type of relief pop?
Definitely. And I don't know when it'll be, other than in general, after the market has a great run up like it did all of last year, you're looking at sometimes 3 to 6 months of sideways to downward action before finally stocks earnings start to grow into their lofty or their reduced valuations, and then maybe start to get a run. And right now I'm looking at, if I were guessing, maybe after their earnings cycle begins in July.
Eric, we didn't have a particularly productive prep meeting for this show today because we spent half of it talking about the Krispy Kreme IPO. And so I don't know if you saw that, but Krispy Kreme is, I guess, confidently filed that they're coming back. 5 years after they got taken private, they're coming back. If I can, actually, I brought up a chart of that stock, and I don't know if you have thoughts on that, or today we have the Honest Company, which is Jessica Alba's, I guess, beauty company. They're going to IPO this morning. Do you have any thoughts on either of those? Here's a quick chart.
I didn't know the Krispy Kreme company was going out again, so
yeah.
No, I don't have any thoughts on that other than again, my main mantra is just patience. Just watch them, let the stock come out, let people and institutional investors decide maybe what a fair valuation is. They'll hopefully form some sort of IPO base, and then if you can break out in heavy volume, you buy when it goes above that consolidation and go from there. But I'd be patient.
Dennis, I'm surprised you even mentioned Krispy Kreme with Tim Hortons around. But well, Eric, I want to ask you. I was looking at those list of companies that you showed there that SPACs or IPOs have come out, and I'm not asking for like an individual stock, but more sector. I mean, I think about 9/11. I remember good old Eddie Franco talking, and he said, "Man, I think cybersecurity. I think that's going to be a sector that's like going to come out of the pandemic." And we've had to stay at home trade, and we're having a reopening trade now. just looking forward, like what's that? Because I mean, obviously, people's behavior has been altered by this event. We're slowly getting back to normal, but like, I mean, fast food, and people have been lining up at these places. What is there a sector that's going to emerge from all this that maybe is being reflected in an IPO or a SPAC?
That's a great question. In general, we do find that somehow medical technology usually produces big winners over time, and so do retail establishments like restaurants. It wouldn't surprise me at all if after the reopening starts that somehow restaurants start to come back, or maybe one that's private that goes public will do really well. There's been a lot of restaurants that have closed. So in my opinion, when people start to go back to dinner and lunch, there's probably room for some restaurant to take off. So I'd be interested in maybe a restaurant IPO of some sort. If you go back, we've had big winners over the years, and Chipotle, and I can't even think of a few others off the top of my head. But I'd be looking at maybe restaurants, and we'll see. But I think usually medical and retail establishments like restaurants are usually good.
Excellent. Thank you.
Eric Krull, as you can see on the screen, is the founder of Krull Asset Management. He's the co-author of the Lifecycle Trade Studies IPOs. Eric, we always appreciate your insights and your time. Thank you so much.
And he does the most homework for his appearances on the show. And he stays up later than anybody I know. He does. But I'm an old man.
Thanks, Eric.
Anyway, thanks, Eric. You're great.
It's great to see you.
All
right, guys, smash the like there for some real hard numbers and some homework.
It is, man. It is.
It's just telling you, the FOMO will cause you to do so many things. And on the IPOs, everybody's like, I got to get in this one. It's so hot. I got to get in this. And the Coinbase was the most recent one. I got to get in. I got to get on day one. This is going to be. And what happened? Exactly what Eric says. It cut through. And not even in the opening price, it opened at 381, but it cut through the low of the day 5 days later. And now we're 10% below where that low of the day was on day one. But if you're in there and you got to get it on the opening price, you're down $100 already. You're down 30%. So, maybe eventually Coinbase is going to be a good buy. But when you're buying these things on day one at lofty valuations, it's in 80% of the time you're losing money. So I like to play with the odds. I'm all about the math. I take a quantitative approach to the markets. I love that, math 4 out of 5 times you're going to get a better price if you don't buy it on day one.
And what's interesting too is like when, it can become available for coverage. Like what brokerage firm is going to want to, it's direct competition, right? For the brokerage firms. Well, it'd be interesting to see what analysts
the exchanges though. Yeah. It's direct, not so much for the brokerages. So,
right.
But yeah, right. We've talked about this, and this is why, I'm scared of Coinbase, because I do believe the competition is coming for it. Even though crypto is in a complete bull market right now, I also believe that where we are in the crypto market right now is where we were in the SPAC market in January. I think when we look at the crypto market in a couple months, I think you're going to see some of it, starting to give back. And maybe not the Bitcoins, Ethereums, I'm hoping. I'm long both of those, but they've had good runs too. They're due for a correction. But you just got nonsense, just going up like crazy. Like there's other coins people are just creating out of thin air. I looked at the girl from Tiger King is coming out with a crypto coin now. A kitty coin, like these are signs of a top. When you're just having random, crap come on the market here. Okay, yeah, well, she's like, I don't, and she just gives the arguments that everybody else gives, printing money, and here I'm going to come out with the kitty coin, and this is going to be what we're all going to transact in eventually. It's all just silliness. There's too many of them. There's going to be a washout. At the end of the day, there's going to be, a few leaders, and that's it. And there's going to be a lot of people who lose a lot of money on all this other smaller stuff.
I should NFT those the picture I showed with the horse, and then the one I showed today, and I just like an NFT, put it out there.
Yeah, NFT it all, Joel. Just NFT it.
Yeah, get $1 zillion.
What about that picture of Spencer Israel that Neil created, the NFT?
Oh yeah, that was good.
I never saw that.
Did he sell it?
He asked me for permission, and I said, you can only sell it if I get some profits, and he said deal, but then that's the last I heard of it. So.
He ran away and sold it for $1 million. And Neil, now he's ran away here.
I don't even know what happened. I don't know what happened there. What's interesting, just on the IPO conversation, and then we'll do some ticker time, was 2 different people or at least two people in different chats both said, it'd be interesting, a Chick-fil-A IPO, and I kind of agree. But let's do some ticker time here.
Before we do that, I just thought there was a great question in the chat.
Sure.
And I can give my opinion. Then is this the dead cat bounce today?
In what?
Like everything. Let's just go the S&P.
I'm going to go to S&Ps because the rotation keeps the S&P up.
Okay.
I'm so glad that I have a huge position in SPY, and that's where a lot of
I
money
know.
is. It's just calm, cool, and collected, and the dips get bought. We have no bear market in SPY. We have a bear market in growth names, and that's why I keep poo-pooing all the growth names, because it's been so much easier on the short side than the long side on the growth names. Everybody's still got, and I catch myself doing it too. I was like, oh, I'll try this one, and then I get stopped out. What's working is shorting the growth names on the spikes, not buying the growth names on the dips, because then they continue to go for 3-4 day dips. They get one day a spike, and then they sell off the next day. So, but it's hard to be short SPY. I want to be short the market. I want to be bearish stocks overall. They're all overvalued. I mean, we've had a great run on some of these value stocks too, where it's gotten to be, that the value stocks aren't as cheap as they were, but there's still some that are still dirt cheap. I mean, people are throwing out a lot of PEs of 10. Mitch is in there throwing out, a lot of stocks with PEs of 9, 10, 11. And some are cheap. I mean, at a 2% environment, a PE of 10 is very, very cheap. Now, again, you just got to be careful that it's not, inflated earnings, where you get some of these companies that are really, benefited from the lockdown. They got inflated earnings right now, and then you're valuing on them. But it's hard to be bearish SPY because the rotation keeps it up.
Yeah, and I'm just going to say, just looking at it just like from a technical, basis, you're so far off that low from yesterday, right? So now people are like scratching their head and they're saying, oh man, I missed it. I should have bought yesterday. So on a day like this, you're just not going to whoosh down. I mean, anything can happen. Nah, I just it's got a lot, and the shorts that they cover on that are scratching their head. So you're going to back and fill. The dips that you get today are not going to be like the dips that yesterday was we saw it in the pre-market. We saw it, gone. There was some decent selling going on. Now people got it wow, 2075, man, that's 55 handles away from here. I mean, you're going to need a bump up the interest rates a quarter point for that to happen. So for me, what I'm looking at just for the day, and also you got the jobs number on Friday, you basically had a 90-point break off that 42.11 high. And you've already taken more of it than half of it back. And that comes into 41.65. So to me, it's a dead cat bounce if we give back the gains today and then close under 41.65. But I just think we're going to just grind. I think for the today's Wednesday, you got Wednesday and Thursday, boom. And then you have the jobs number on Friday. So I don't think you're going to rip over 4,200, and I don't think you're going to just dip down, right back down, give you another shot at 41.20.5. I'm just looking for a kind of grind and see if we can close over 41.65.
It's the 5 Ds of the markets, right? Dive, duck, dip. I don't remember.
Yeah, we brought that
do
up in a
dodge
while.
twice or something, or dodge twice, because dodgeball. They do dodge twice.
Yeah.
When I took my girls to that movie, someone said, "Oh, this is a good movie. Take your kids to," and they weren't very old, and it was
There's
not a good movie to take.
There. Is there? It's not that.
I think we're pretty young, Dennis.
I'm bringing it back. I'm sorry.
All right, bring it back. We're not starting.
My next guest is here. LoCascio is the founder and CEO of LivePerson. They had earnings last night, ticker LPSN. I want to bring Rob in, and Dennis and Joel are going to.
All right, adios, amigos.
Themselves out. Rob, good morning. Thanks for joining us today.
Hey, Spencer, how you doing?
Doing well. Was looking at your numbers last night, and I saw what you highlighted in the press release, which was it was a pretty good quarter for you guys. The best quarter for growth, you said, in your history. What drove growth in LPSN last quarter in LivePerson?
Yeah, I mean, we provide conversational AI systems for all the big companies in the world, like your Cities and your T-Mobiles. And so when you message them and talk to what we call chatbots, and we build that, and we're a leader in that platform. And so there's just so much demand right now. There's a big shift going from traditional commerce to what we call conversational commerce. And I kind of have this vision that every company could have their own Alexa. And that's the way I see the world kind of playing out, that we're not going on a website and putting things in a shopping cart and this and that. And we're showing it in the numbers. We grew 38% in the quarter year over year, and that's the highest growth rate. It's our fourth consecutive quarter of over 25% growth, and third consecutive quarter of Rule of 40. So we're also doing really good on the bottom line. We've been around 20. I've been public for 20 years.
Right.
It's my 21st year of running a public company. So I've been through a lot to get here, but we're definitely on a run right now.
So how does the last 13 or so months, 14 months compare to those prior 20 years? Because like in theory, wouldn't the last year have been like just a perfect storm for you guys?
Yeah, it's like my whole thing, if you went back like a couple of years ago when we launched this new platform, the messaging AI platform, I was like, voice contact centers, I just don't believe in, like sitting on hold and press 1, 2, or 3. And what happened during COVID is the contact centers got shut down, because people can't socially distance in them. And then they were sent home, these agents. And what happened right away is our customers and more, prospects all said, we got to automate these conversations. We've got to really, scale conversations. Consumers want to talk to us, but we can't have agents at home doing that. So that was the first hit. We went up like 40% in volume last year between April and March. And then retail came. And so like we have one of the largest jeweler companies of 3,000 stores in the US, a public company. They went live in November with selling online and bringing the people in the jewelry stores online. And they've sold tens of millions of dollars in a very short period of time. Chipotle, burritos. You can build a burrito now, using talking to a bot called Pepper, and then you go pick it up at the door. So all of that came in during during COVID, and now it just continues to go because consumers, they want to stay digital.
You just mentioned 2 use cases right there, but I want to ask you specifically about healthcare and government. What are the use cases there? Because I think AI chatbot, and I think retail, I think banking, I think any customer service role, but I don't think government, and I don't think healthcare. So can you speak to those?
Yeah, I mean, like, let's take healthcare. We signed in the quarter the largest healthcare company in the United States, third largest in the world. And when you think of healthcare today, it's such a disconnected experience. I go to the doctor, and I give them my insurance card. A bill comes to me, then I may call the insurance company because the bill looks wrong. It's a whole. I call the doctor back. So we're trying to create is more of a connected experience. I'm on my mobile device. I message the insurance company. I see my bill. They message me back. I can also connect with the doctor, and all of that becomes in a single pane of glass for me. It's all on my device. It's all in line. I'm not like calling and then emailing and then doing something else. It all is there. So we're looking at really changing, the face of healthcare. We also launched during the quarter with Citi a way to do testing. We have a thing called Bella Health, where we're doing testing, COVID rapid testing in home to bring their employees back to work. So we're also taking healthcare a little further and thinking, what if you woke up in the morning, this AI could help you do things with your health and wellness in your life. You could also do testing to check, your blood and figure out where you are in your journey of your health. But an AI could assist you and take you through it. So that's sort of the healthcare one. And then government. I mean, government is, if you ever try to call the IRS or try to connect with any government organization, even local government, it can be tough. And we did launch a big program around vaccines with the state of Maryland, and that people are asking about them. Where do I go get them? And so we built an AI to help assist that. And then we're working on health passes now, is that you're going to have a health pass that's in your app that you can then take, and you can enter, airports and take flights and things like this. So this is the areas we're working on.
I'm on with Rob LoCascio, is the founder and CEO of LivePerson. So you guys raised your fiscal year guidance last night. What is the growth driver coming out of COVID now? What is the growth driver?
We're seeing AI, conversational AI, being adopted everywhere. And in these use cases, we originally customer care, but we had like Dunkin', they're no longer a donut, they're more than donuts, but they're using now conversational AI to drive a loyalty program. So they're putting QR codes on, in the stores. You hit the QR code, you open the app, and then you're going to have a conversation around, joining the loyalty program, and they're going to give you different things for doing that. We have one of the largest car dealerships in the world. They had to shut down their contact center, but they're now going to use messaging and AI for things like when they see your brakes are wearing down or your oil needs to get changed, they'll send out a message to you, and then you'll converse and you'll set up right there an appointment to get your car fixed. So from like donuts to cars, to jewelry, to healthcare passes, to customer care, what's happened now is that conversational AI is now taking off. And I really believe, I really fundamentally believe that we're going to talk to a machine. We're going to communicate with it. It'll help us with our intent, help us, find things, help us buy things. But this idea of like searching on Google, hitting a website, scrambling around, maybe picking up a phone, calling, I get something, the customer service is no good. We want to just make it very simple. I want to buy something. Here it is. I need service after I bought it. Here it is. And that's all a very easy experience. That's the platform that we built called the Conversational Cloud.
Good question from our chat here from James Santangelo. I'll just bring up his comment. Whoever has the most data has the best AI. What is LivePerson's data source?
So that's what makes it unique. We've been around, like I said, I invented chat for customer care back in '97. So we've always been very focused on data around chat. And then it moved to messaging 4 years ago. We generate about 80 million conversations a month and end-to-end business conversations from the largest brands in the world. We have about 18,000 customers. That data is enabling us to build the highest quality, highest scaled automation in the world. And my CTO who came here, Alex Spinelli, 3 years ago, ran the Amazon Alexa team. And he came here 3 years ago because he looked at our data and said, wow, Amazon only has like the data of Amazon. You guys have the data of 18,000 customers, plus you have of the largest brands. We have 40 of the largest banks, 20 of the largest telcos in the world. You have that data. We can help solve and automate conversations across every vertical. And so you're right. Our moat is the data that we have.
So do you see a world where, like, you see a future? Obviously, you're bullish on AI chatbots. You see a world where there is not going to be any customer service. Am I getting that right? Or like human to human? I mean,
yeah. Although the name of the company is LivePerson. I've been in the business like having live agents on our platform for my whole career here. The majority, it's like the dirty secret. The majority of customer care and why agents are there, it's not to be friendly with you. That's I agree. Humans need relationships. I'm not doubting that. But the reason they exist is because the back-end systems of companies are old. And the human needs to interface between you, the consumer, and that old system. You don't even know what goes on like behind the scenes. They have like 5 or 6 systems open. And you're telling them, like, my bill doesn't look right, and they're going across different systems. And you don't want to do that. What you want to do is say, my bill doesn't look right. You want to say, can you check it out to a machine or to whoever? And it comes back and says, you're right. The bill's not right. We'll correct it. Sitting there and talking to a human about that doesn't make sense. The relationship I get. But if you look at really why customer care agents exist, because there's a gap between digital and these back-end systems. And that gap now is being closed because of things that happened in COVID. That's rushing more open access to back-end systems, but that's the reason they exist. And we're turning them, by the way, we're not getting rid of them. We're turning them now into AI bot makers. Like, we've got agents now, they don't answer calls or chats. They actually create bots. So they need to be the bot makers. So they shouldn't lose their jobs. They should convert it. And we're actually doing that. We're seeing that.
So I read in the release last night, you guys signed 98 new deals in the first quarter. When you sign in one of these new deals, like, what are we talking about, like a lifetime contract? I mean, like, how sticky are these contracts? How long, when you sign, whether it's like a big conglomerate or not, how long is a typical deal with LivePerson?
I mean, usually the large enterprise deals are 3-year deals contractually. We've had customers who have been with us 15 years. So, we've been around a long time, and we understand, the nature of the business. The reason the revenue grows the way it grows, and we're seeing this acceleration, is because the majority of our revenue is recurring revenue. So that's people just paying us each month to get access to the service. And you can see the growth rates are going up because we're keeping customers, and they're sticky. They integrate this technology into like their website, their phone systems. They've got thousands of agents trained on it, so they can take these messages, create automations. So the platform has so much in it, and it gets very integrated into the business. And now we're adding other capabilities. We're adding capabilities around social, so you can monitor social media. We're adding voice capabilities for digital voice. So we're really taking over all of the communication and connection channels for the brand consumer experience.
Wait, explain that when you say monitor social media. So like I'm, brand X, for example, right? What social media monitoring capabilities can you give me?
So right now they usually have a tool, like they have a tool that monitors. So if you put up there like you suck,
Right.
something's wrong. They monitor. Every brand is monitoring their feeds on social, and they usually get back to you because they know if they don't, there's a problem. So that usually sits in a separate system. And what our customers have asked us to do is bring that over onto our platform, so that the agent and the business has one view of the consumer. So the consumer may have gone there and put something on social. They may then go into message to an endpoint like Facebook Messenger or Apple Business Chat or on the website, and they want to see that consumer as a single entity across that. So we built out the capabilities. We just signed one of the largest airlines to this product line. We have one of the big streaming music services. These are big users of social. So we have a lot there, and we're attacking that market pretty aggressively.
So the question that like every consumer wants to know when they look at a company like yours is like, okay, does this mean I'm getting better customer service? Is that what this means? I understand that I'm talking to a robot, and theoretically it could be more efficient, and I'm already pissed off as it is, right, for having to deal with this in the first place. But does this mean I'm getting better customer service?
Yeah, I mean the alternative is voice calls put on hold, or sending an email. I mean, the worst consumer experience is sitting on a voice call. I mean, we've all been there. I mean, first of all, voice calls are it's a 50-year-old technology, if not more. I'm talking about for the contact center. Contact centers, by the way, they don't exist right now, but when they did, they look like factories. It's like thousands of people all next to each other with headsets, and every day they're just sitting there. To give you a little bit of the other dirty secret of contact centers, usually it's like 40% or 50% of the people who work there, they end up quitting every year. And it's not that they're bad people, by the way. They're actually very kind people who want to help customers. But what happens is that it's so wearing on them to have someone screaming in their ear all day, and the technology is so old that it breaks them. And so what we see is when they're on our platform, it's like silence. They're messaging, it's asynchronous. Like we had one agent who told a customer, we looked at the transcript, they said, I have to go to lunch. Do you mind if I take a lunch break? I'll pick this back up in an hour. And the consumer's like, no problem, because it was asynchronous, as it was like normal messaging with a friend. And this is the kind of things we see when we look at the care that the consumer can get. Consumers love it. It's like what they do with their friends and family. Now they're doing it with a human or an automation like a bot. Bots are a dirty word because most of the bots early on that were built weren't built with like the type of technology we have, and they were sucky. But we have good, our stuff. We have high quality.
Well, that'll be my last question here. Is like, we all think of like the early chatbots, and while innovative, they were the first generation. What makes your technology so much better? Because most people probably just think of those first gen chatbots.
Yeah, what you see is a couple things that we built. One is we have the data, so we understand like what a really good conversation looks like. We have a tool set that allows the company, the brand, to understand the intent. We have a thing called Intent Manager. You got to really understand what is the consumer's desire, what do they want, and we have a way to analyze that. And then we have this tool called Conversation Builder, and you'll see most of the bot building tools, they look like flow charts. It's like you put an intent at the top, and then it's really messy. And what we want to do is build something that the normal agent the normal contact center agent who really understands conversing, can build a bot. And they just write it out like a conversation that they normally have. And they use the data source that we give them from the transcripts. And they're able to do that. Then they deploy the bot and they watch it. And they're watching it and they're improving it. As it fails, they jump in and they'll take it over as a live conversation. But there's a circle between agent and bot to improve it. Most of the time you see like it's technical people using bad tools. They put it up. It keeps failing. No one's watching it. And then they try to improve it later on, like a couple months later. We have this cycle that the agent's in there improving it day by day.
All right, I've been on with Rob LoCascio. He's the founder and CEO of LivePerson. It's up on the screen, the ticker LPSN. Rob, I very much appreciate your time today. Thank you so much for joining me, and congrats on the quarter.
Thanks, Spencer. Have a good one.
All right. 918. Guys, smash the like for Rob if you want more exec interviews, whether it's on this show or frankly any of our shows. Smash that like. If you missed it yesterday, I did like 6 interviews yesterday. 5 of them were just on the special edition of the Power Hour that I hosted instead of Luke Jacoby and Jason Raznick. So check that out on our YouTube channel. As far as today's programming, let me bring up the schedule for the day. Where is that? Here we go. Here's today's programming slate. You got pre-market prep at, well, now, frankly, this is going to segue into an informal live trading thing. Mitch and I did something similar last Thursday. We got some pretty good feedback. And frankly, David Green can't live trade with us every day. So Mitch and I are going to hang out with you for a little bit here after the open and just watch the market as it unfolds for the day. SPACs attack at 11, Power Hour at noon, Get Technical at 1. The At the Close show, 3:30. After Hours with Ryan Rosbiani at 5. Money Mitch at 6. And then After Market Therapy with Stock Mom at 7 o'clock. There is the schedule. All of that will be on youtube.com/Benzinga, also on Twitter and on Twitch. We are on Twitch. I don't mention that enough, but we are on Twitch. So check us out there if you haven't. I also don't mention enough that we have a swag store that I feel like has gems in there, gems that we never talk about, and we're always adding more stuff. Frankly, we give a lot of stuff away too. So check out swag.benzinga.com. Pre-market prep swag, SPACs attack swag. Just don't tell Joel Dennis that there's pre-market prep swag. We took down the stuff with Joel's face on it, but we'll get it back. We'll get it back. Jason Raznick swag, Get Technical swag. We got accessories. We got ticker swag. We got a lot. Check it out. Swag.benzinga.com for the Benzinga swag store. By the way, happy Cinco de Mayo, everyone. To everyone celebrating back-to-back holidays, right? Star Wars Day yesterday, Cinco de Mayo today. It's a good week. It's a good week. Mitch, what is this? Mitch, what is this? Mitch just I don't know how I feel about that. Actually, it's funny. It's funny, but yeah, I don't know.
I love it, dude. I mean, if you want to talk about Cinco de Mayo, you gotta go ahead and have some spirit here. But if I know that a lot of people really don't even know the story behind Cinco de Mayo. So one of the things,
and you have authority again because you're
I'm actually Spanish, so I can.
Right.
Puedo hablar español, and that's the important part right here, right? But really, I mean, it's all about the Battle of Puebla, and really, this holiday represents in 1862, Napoleon III sent his troops to invade the country of Mexico because of they supposedly had debt to France, right?
Yeah, okay.
And so the Mexican army was actually outnumbered here, 6,000 to 4,700. There were 2,000 Mexican soldiers and 2,700 armed civilians that managed to defeat those 6,000 French on that historic day. So that's really the reason why in Mexico they celebrate Cinco de Mayo.
I had no idea. I admit I had no idea.
Hey, it's all about the battles.
I've appropriated your holiday for my own selfish gain, but I had no idea the real reason behind it. So thank you very much today. You know, you learn something new every day on this show. And today I learned about Cinco de Mayo. So thank you, Mitch. I appreciate that. I saw someone in the chat mention Facebook. Yeah, there was a headline just now, and it did tick down on the headline that they upheld their ban of Donald Trump. Dip got bought right away. So that was a very, very quick. It was a very, very quick trade.
You got to be quicker than that.
Got to be super fast to catch trades like that. Here, I'll pull my. This is Facebook right there. You can see that headline hit right there. Bought the dip right away. So that was super quick. But there was a trade there if you were fast enough. Mitch, what are you watching this morning?
All right, so I have a couple of trades that I'm going to go ahead up and bring up here. Let me go ahead up and bring up my watch list. Just putting out a quick tweet right here to get us some more viewers here. But like always, guys, definitely smash the like button, hit the share button, let everybody know. You got Spencer and Mitch and Money Mitch right now going to be looking at some trading. So definitely join up, guys. Hit that like. So let's go ahead and let me bring in here my watch list. So I'm going to go ahead and stop this screen share. Let me share this other window here. All right, so
my bad.
There we go.
I'm just seeing all your messages from earlier. My bad.
You were sleeping. No worries. It's all good, Spencer. It happens. You were on the show. I'll give you the benefit of the doubt. Let's keep rolling, right? Right on, Money Mitch. You guys got it. Definitely hit the thumbs up. All right, guys. So here you guys are watching my today watch list. I'm going to go through it really quickly. So yesterday I gave some stocks that I wanted to keep on watch. USAK, LIVE, and ASO. Those are included on here. Oh, there it is. There's ASO. So those are my value plays. Those are all under or really close towards that 10 forward PE. Definitely take a look at those. Vizio's been on the move recently. It just bounced back a good amount yesterday, so it might have a little troubled day today, but I'm going to keep an eye on that. I did see shippers. I don't know if you saw that, Spencer. SHIP, SHIP moving. SBLK also. That's Starbulk. Take an eye on those because they're definitely moving today. I could see potential kind of these shippers getting a move today and getting a boost. I saw Kern up. That was a cannabis stock, and to take a look at that one. And of course, CRSR could trade closely with here. That's HEAR. Keep your eyes on that one. I saw also an analyst upgrade on UA. So that's Under Armour, guys. And then for
their earnings were okay, right? It's come a couple days ago. Yeah.
Mm-hmm. This is more of a retail play because that's why I also have Macy's on here, guys. And there's a reason why I have Macy's is the chart looks great, and if it can get a rip up, it could definitely start moving. I do have FTCV here. Why would I have FTCV? What do you think, Spencer?
FTCV.
Put in the pressure. Let's see if the chat knows what this stock is.
Well, I know it's a SPAC, but is there news?
Yeah, but what's behind this SPAC? What's the company? Let's see the chat. I'm gonna give them a second to tune in.
Stop. FTCV is eToro, right?
Oh, there you go.
See, I knew that. No, I did not look that up.
Solar coming through too. I'll give you the shout out, Solar. Good job, man. Definitely.
I knew that one. Just so we're all clear.
Got to put Spencer on the test on the hot seat sometimes, right? So definitely, guys, yeah, we'll definitely see this one. One of the things that they did is they included Doge. That could just give it a ride, guys. That could give it a ride.
It was like a couple days ago, wasn't it?
Yeah, but it's starting to move now based off of it. I think that's really where one of the things is it wasn't something that was like just put out everywhere. It was only it wasn't like something that everybody saw. I think there was some late investors that noticed it. And so today it's up about 1.5%. I'll take a look at it. You know, if we see it start running, we'll definitely take a look. MGM is up today, I think, based off of Caesars Entertainment did give good earnings today. So I'm going to take a look to see if maybe MGM gets a little push because of that Caesar earnings. But I'll take a look at that also.
Can I tell a quick Caesar story real fast?
Yeah.
So
go for it,
this is a very, very fast story. So I mentioned this yesterday. I was on the stream and I said, oh, by the way, Caesars reports tonight, everyone. And Jason Rasnick heard me, and this is must have been at 358 or something, and went and bought Caesars purely because they have earnings, and told me it's my fault if he loses money because he wouldn't have known they were on the schedule unless I said so, or if I hadn't said so. So they're up this morning, thank God, because I don't need that in my life.
You don't need that in your life, man.
No. Jordan Watkins is asking the real question. Did Caesar ever really live at Caesar's Palace? Is the right question. Still never got an answer to that all these years later, Jordan Watkins. Sorry to interrupt you. Keep going on your list.
Yeah, the last one I'll mention here, and then we can start looking at some charts, is EQOS. That's Diginex. And they did get a buy rating with a price target from HC Wainwright up to $12, guys. So that's what I'm going to keep this one on watch, guys. This one did report a couple days back an increase of 300% in volume for trading there in their cryptocurrency. So definitely we'll take a look at that. They're also talking about that they want to go ahead and spend some money to bring some new products and kind of increase this growth. So definitely keep your eyes on that one. That's EQOS Diginex. Anyone else you guys want me to take a look at in the chat? Definitely let me know, guys.
Yeah. Let's look at lumber liquidators here, LL, because they had earnings, and I know, but before everyone jumps on me, I know that lumber liquidators is not the kind of company that is positioned to benefit from an increase in lumber prices. But a lot of people, when they hear lumber going up, they think, oh, what stocks do I want to buy? They Google lumber stocks. What comes up? LL is what comes up.
Yep.
So, I have it on my radar just for that reason. The stock is down this morning, down $3. The earnings were, I guess, okay. Let me see if I can pull the numbers up in Pro. Yeah, the EPS beat, the sales missed. They did not give guidance. Shocker on that. But,
Shocker. Well, I'll tell you what, Spencer. I actually brought up this stock for Money Mitch, and I did a little bit more in deep dive into this company and started looking at what's going on with Lumber Liquidator. So one of the things that they did is they did get a tax benefit from kind of the exports that were coming out of China. And now this is not going to go ahead and play into this next quarter. That's the only concern that I have, because the tariffs that they could get charged on the materials could be high. And so they did get a tax advantage for the last couple of quarters, but now this next quarter, they would definitely not have it. So pay attention to that. That might cause a little bit of trouble here, but I am in agreement with you that a lot of people are looking to make kind of improvements to their homes. One of the things that I mentioned was that real estate realtors are telling people like, hey, make a $10,000 investment into your house right now, and you could possibly sell your house for what you think is the value plus 30% on that, 20%. And so that makes a difference. You know, if you can do an improvement and let's say make an improvement on your house for $10,000, but they get value back on your house for $40,000. I mean, that doesn't sound too bad. There you go, guys. Opening bell here.
So for the moment, we're in the green, everybody. Take a moment.
All right.
Take a moment and sit on that.
Banks have been up recently. I saw them in the green this morning. One that I'm going to be paying attention to early, guys, is a leverage trade, guys, but definitely be careful. This is oil gush. I'm going to be taking a look at that. I'm still holding on to that UA trade from last time we were trading here, Spencer. Remember when we were trading and I took a trade on UA?
Yeah.
Under Armour? I'm still holding it. I'm supposedly up $75 on that one. So the UA over time definitely had done well there. I had a 2013 average pricing. All right, there you go, guys. The heat map's starting to heat up there. Let's take a look at the heat map before we take a look at any trades here. So really quickly, I'm seeing Zoom up about 0.75%. So that could show some growth, getting a little bit of a lift here. Let's take a look. What else do we see? Semiconductors looking good. Creed, Texas Instrument, oil and gas up. So definitely, I'm going to be looking to see if Gush can turn back around and get back up there. We want to see a kind of a red to green move, a push down, and then quickly pushing back up. Looks like we got computers, Dollar Tree up today, some cheaper retail. We'll take a look at and see what we find out there.
I'm using my movers tool in Pro Beta, guys. This is what I'm looking at right now after the open. This just populates as soon as the market opens. I'm looking at what's up, what's down, percent change from the open. That's how I'm looking at. Not percent change from the close or from the pre-market high or from 4 a.m. No, percent change from 9:30 to right now is what I'm looking at. Well, it's 9:31. So seeing what's up, what's down. This is what I use during the day to keep track of stuff. right, and keep track of the market. And obviously, you know, you have charts too. That helps. But this is what I use. This is the movers. I'm sorry. This is the scanner tool. That's what it is. This is the scanner tool that's in beta in Benzinga Pro that I'm using right now. Check it out if you haven't already. Steve King, heat map incoming. Heat map incoming on Benzinga. Not there yet, but I know that our developers are hard at work, as they always are. But
all right, guys, trying to get a little trade here in Penn. Let's see if I can get in Penn here. I'm looking at DKNG starting to move up. Going to look at Penn here to get it near the VWAP. Put out an order slightly above VWAP here, but it is pushing up higher. And I did see DKNG get a good push here right out the open. So let's see if I can catch this on a little dip and push out.
Ooh. You see a lot of stocks that have no liquidity in the pre-market session just make their moves at the open. It's what happened with SYX just now, which just fell like $5 at the open. They had earnings, and so a lot of times you see that where a company will report, have no liquidity after hours, and all that move just happens in the first minute, which is exactly what happened with SYX just there. So what else am I seeing here? I'm looking at what's up, what's down. Clovis. Let's take a look at CLVS here. Clovis. I haven't looked at that name for a while. They had earnings, and it looks like they're bouncing. Right, their pre-market low is below $5, and now they're all the way up.
I like it. I'm going to look for a pullback.
Look for a pullback. It just had the pullback, and now it's coming. But now it's.
Yeah, I had about a 20 cents pop out, then pull back to VWAP, and then a quick push up here towards 560s. Let's see if we can get a pushback towards 535, a pullback, and then I'd try to get in. UA still going up. UA doing well today. UA doing well, guys.
Good call, Alan Vincent. McAfee shares are halted on a circuit breaker, MCFE. That's they had
Oh, should I try to trade a halter? They
had earnings right last night.
Circuit breaker hold? I haven't done one of those in a while, guys. I'll give you some background on those, guys. So for me, whenever you see those halts, if you're a day trader, I've always seen kind of the first halt be kind of maybe a tradable event, but definitely after you get multiple halts, that's when you got to be careful, guys, because you can get the halt on the way down, and then that one really hurts. You know, there's nothing worse than getting stuck on the way down when you can't get out of a stock, and so you got to be careful with that as a day trader. Definitely wanted to go ahead and mention that. Diginex not looking bad either, guys. That one's not looking bad. I'll look to see if we get a pullback in CLVS, but that's just going straight up right now.
And I just want to mention, if you guys want to know how to find halts here, the data is in Benzinga Pro. This is like your homepage of Benzinga Pro. All you do is go to the signals tool, right? And you just check on halt/resume. I'm going to uncheck price spike. There's 2 clicks. 2 clicks, and I got all the trading halts for the day piped into Benzinga Pro in real time. So I'm seeing CHMA, which that was pre-market. But since the open, we've had McAfee, we've had Shineco, TYHT, we had Leisure Acquisition, LACQ, halt, and McAfee just resumed. So let's see what happened with that. I don't know if you have it up on your screen.
No, I don't have it. I'll get it up there right now. Just give me 1 second. I'm trying to fix this right there. Get annoyed when it shows high and low and all this overlapping.
Here, I'm gonna go back to my thing. We'll go to McAfee.
There you go.
Bang, bada boom. 1 minute chart. Okay, very interesting. All right, back to my scanner tool. This is my home base for the day. This is my home base for everything after 9:30. My home base before 9:30 is this. My main movers tool with my pre-market scanner. My home base after 9:30 is this guy with an up filter and a down filter, tracking moves from the open.
All right, guys, we got a small order there in Penn. I'm going to look to increase here to see if we can get it to increase, but it is dropping a little bit here. We got to be careful here with a pull down to the shadowing here. So let's go ahead and get our average size back up here, and then I'll let you know what my average is here. to go ahead and establish that risk there.
Scooby-Doo, no David Green today. He will be going forward. He'll be with us a few days a week. We're still hammering down in which specific days those days are going to be every time, but he'll be with us a couple days a week, but he can't be with us every single day. So we are in the market for some more live traders. If you know anyone, email shows@benzinga.com. I had a few people do that, made some reach outs. Thank you very much to those people who emailed, and let us know if there's anyone else you want to see on our channel for live trading. Holler at us, and we will do our best to get them on the stream.
All right, guys, missed my ad there in pen. Looking to get some more there. Oh, looks like I got my fill there. Guys. We got a 92.17 average there in pen, 50 shares, 92.17.
Hey, you broke up there. What?
Oh, my bad. A 92.17 entry there for pen, guys. So I got 50 shares at 92.17. Looking for a pushback through 93s.
Bring Neil back. Richard says Neil will be back at 1 o'clock today. 1 o'clock today. Neil will be back.
Yeah, we have Neil there. Neil's always here, guys. Neil just got some other things to do early, knocking some things out.
Can we get Triple D to the live trading? Adele, you're asking the $1 million question, and the answer is, as much as we would all love to see that, the answer is no. You're not the only person, Adele, that would love to see that. But the answer to that is going to be a no. Every time I've asked, at least the answer is no. So, hey, that's how the guy makes a living. I can understand why he wouldn't want to be distracted, but I'll update you if that ever changes.
All right, guys, keeping an eye on that Diginex. It is doing a pattern there. Nice kind of pennant flag look here. But let's see if it can really start getting some volume. There's no volume after that opening tick there on the 1 minute chart. So let's see if it gets some volume. All
right. Mitch is looking at the stocks. I'm keeping one eye on the Doge, which is at 65.
The Doge.
Almost 66 cents right now. It did hit a high this morning of 68 cents. I'm seeing. So keeping one eye on that, because why the hell not?
All right, guys, I'm looking for this rip through 93s now for the pen. Let's see if we can get through that. I'm going to go ahead and sell half of that as we get that break through 93s. Looking for it to come up towards 93.50s.
Is Luke in rehab for his bang addiction? He might be.
Yeah, he definitely is. I got to tell you guys, I feel bad for that guy's heart.
He might be. Get true story about, if you want, one thing about Luke Jacoby that sums up his life, Luke Jacoby does his grocery shopping at like CVS and 7-Eleven.
That sums a lot of things up.
Luke buys groceries at 7-Eleven. That's a fact.
All right, guys. I want to catch up with the chat. What's up, guys? How we doing out there? What stocks you guys want me to take a look at? Maybe you guys want me.
There's one question. What was it? DX. About 1% today. Not a crazy valuation stock. This is an IT company, right? Yeah, this is an IT company. PE of like 10, which is reasonable. Let's see. DXC, are they on the earnings calendar? They are not confirmed, so we don't know when they're going to report for the last quarter. But the stock has made a very nice move. Let's pull up like a longer term chart here of DXC. There it is. Let's see if we have any opinion, if we can come to any opinions on this. This is a daily. I'm gonna go back 1 year on the daily. Here we go. I don't have any indicators on here. I keep my chart pretty clean. Again, because I don't do a lot of short-term day trading, and when I do, I'm not leaning on any one indicator. But Mitch, I'm sure could pull up. I'm sure I could get the view up on here if that's what Mitch is using. Yeah, let's pull up the view up.
Yeah, that's the only one I use, and really, it's not to trade directly off every time. It's more along a line in the sand for me between the bears and the bulls.
Right. All right. Let's pull up. There we go. This is a 5-day, 15-minute chart. Okay.
Yeah, this looks like on the daily. Just to point out, this looks like it's coming back towards resistance. A lot of times when you get breakouts, they'll come back to test the resistance to create new support there, guys. So on the daily, this shows that it broke out from, let's say, that $32, and it went up to a high on the 3rd of 33.86, but looks like it's trying to pull back towards that resistance there, closer towards 32.25s and 35s. A lot of times when you get a breakout, if you don't get that continuation volume the next couple of days, what it will go do is it'll go back to testing that prior resistance to make a new support if it can hold there.
All right, I learned my TA from Joel, right? So I start with the daily, then I go to the weekly, see if anything jumps out, which in this case, that's notable that it's above the high of last week. And then I go to the monthly if anything jumps out. No, nothing jumps out of the monthly for me. The weekly is interesting. We're at this weird sort of triple toppy area. On the weekly and the daily is of course chart looks better from that point of view, and then on the intraday chart, so we're above the VWAP here. Well, this is a 15-minute chart. I would go to a 1-minute chart to see more.
We did get a question a little earlier asking me if it's kind of trouble to trade live or stressful to trade live. Guys, I've actually done this. I've actually had a YouTube channel, and that's how I was found. Really is that I did day trading on an everyday basis, and I did it live, transparent. I used to just to give a shout out, I used to do it on a channel called Beginner Trading. But really what it's about, guys, it's about learning strategies, learning processes, and learning your personality. I can't stress it enough, guys, because if you don't take enough data, you won't learn what your personality is and how you can work a strategy. There's certain strategies that aren't for everybody. And so you need to find out what works for you. Let's say if it's moving averages, trading off moving averages. There's people that like, let's say like the 9 EMA, the 20 EMA, the 50 or the 200. There's people that use VWAPs like you see me using here. There's going to be people that use what's called 5-minute breakouts. So they'll use a 5-minute pattern right out the beginning, and they're looking for it to break the high or break the low, and then use that 5-minute block to go ahead and look for that next kind of reward. There's so many strategies you guys can look out there, but the key is always looking at what works best for you. We stress it often on pre-market prep, so that I just want to definitely bring that back up. It's not every trade that works well for you, but if you really stick to it, you can really start learning how to risk manage. First thing's risk management. Second thing, I think, is really start learning how to take profits. Some people don't ever learn how to take profits, and then they're always battling trying to get that big winner, but then they're cutting their losses low. And then what ended up happening is even the low losses can stack up because you're not understanding where kind of the sweet spot is for your rewards. A lot of times for me, that's going to be closer towards, if I'm swing trading, 20 to 30%. If I'm intraday trading, I'm looking for more of let's say a 2% risk versus a 5% or 6% gain.
I don't think I imagined this, but I'm pretty sure somebody asked about Uber earlier, and I want to bring the chart up here. A very interesting day so far for Uber. Where's my Uber chart? There it is, up on the screen. So moved in sympathy with LYFT. You can see it down now from the open. It's well off the high of the pre-market session. And LYFT is down, I should note, as well. LYFT dropped $1.50 at the open. Uber kind of did it here. Let me get out of the way. Uber kind of did the same thing here. So it was moving in sympathy with LYFT. Remember, they also had the couple of headlines from I guess it was Monday or Tuesday now, where there's going to be that arrival car that is going to be made specifically for ride sharing companies like Uber and LYFT. They also had the news that the grocery delivery. That's what it was. They're going to get deeper into grocery deliveries, going to try to eat DoorDash's lunch. And so someone asked about the stock. I can go back to the chart here. Look, very simply put, it's a growth name, and you guys know what's been going on the growth stock front, right? Not a great environment right now. Although Uber has held up relatively well, the name of the game for them is going to be, as long as growth remains out of favor, it's going to be a question of, okay, well, like how fast can they get to profitability? Because LYFT has said, they said this last night, that they're going to get to profitability in Q3. And LYFT just spun off their self-driving unit. They're trying to get profitable. They're both trying to get profitable. And as long as value remains in favor and growth remains out of favor, then those non-profitable growth stocks like Uber are gonna remain out of favor. If they can turn profitability, then maybe that turns for them. But for the moment, it's growth. It's what's the valuation? They don't have the PE because they're not profitable. Market cap of 100 billion, price to sales of 8, which is a little high. So,
all right. So just want to go ahead and point out the value plays that we were talking about, right? So this morning and also on Money Mitch, one of the things that I've been stressing is let's find some story stocks that actually have some value to them. Yeah, and so this morning I talked about ASO, right, guys? That's Academy Sports is already up, guys, almost 5% up on the day, guys. It's looking great here. I'm starting to get a nice drive right out the gates. I'll look for a pullback towards VWAP, but as we can see, guys, the daily chart has a nice breakout. This is one that I actually called out on Money Mitch yesterday, guys. The reason why you guys should be watching Money Mitch is getting the story stock so that the next day you guys can go ahead and do your research and decide, is this a trade I want to take? Definitely, guys, check out Money Mitch. I can't stress it enough, guys. I give so much gold in that channel. I honestly should just keep it to myself or charge thousands and thousands of dollars for that. But one of the things that I'd say is that it's not about what the picks are, but the process. Learn how to go about it. So now I'm focusing more on the fundamentals and looking for that PE to match the story and the technicals. If the PE is not there, I'm not trading it, guys.
Yeah, and that's, again, going to be at 6 p.m., right here. Right?
Yep, I'll keep going. I'll keep bringing the gold, guys. Let's look at another one in there. Up today, guys, about 9% is that Under Armour, but looking like SHIP is also up today. MGM up about 3%. USAK was another one there that I mentioned, guys. This is one that I mentioned yesterday, and really I didn't mention yesterday because it had this big green bar. I saw it in the early morning hours, and this one has a PE of close to 10, but the big thing about this one is the industry average is 17. And so they're definitely undervalued there compared to their kind of the industry average. So I'm looking at this one, USAK, to keep ripping on up. Let's see if it keeps moving. It's doing pretty good today.
You talked about reasonable valuation. It's hard. Whoever asked that, it is really hard right now to find stocks in uptrends that also have reasonable valuations that aren't at like FedEx or UPS level, right, of uptrend, right? I mean, the runs that those two stocks have had have been unbelievable. If I'll pull up a chart here of UPS, it's just madness, right? So, and as Dennis said this morning, like you almost feel like you do miss it. I understand why you'd be hesitant to buy here. But finding stocks like this that aren't as elevated that at nosebleed levels that are still reasonable, that are still also not in a downtrend, it's really, really, really difficult. It just really is. Valuations are high, Jordan. You're absolutely right. If anyone, so now is the time to be doing your screens, right? Screen whatever service you use, whether it's Benzinga Pro, whether it's through your broker, set screens, right? Look for these lower PE stocks that are, if not at all-time highs or not at 52-week highs, well, not at 52-week lows either, right? I use the screener tool on Benzinga Pro. I use a screener tool on my brokerage, which I use Fidelity for my main trading and investing. And if anyone has any names, drop them in. But it's tough out there. It really is tough because like you look at what's up today. You look at a stock like MUDS, right? MUDs, right? This is going to be tops, and it's still going up. It is still going up.
MUDs, baby, those tops NFTs, man.
Valuation through the roof does not matter in this case.
It's catalyst. It's catalyst, Spencer. One of the things that
story is still intact. That's the difference.
Yeah.
That's the difference.
and they have some benefit to the fundamentals, right? And so one of the things is with the MUDs and the Tops NFTs, they're getting that 6% on every transaction. And look how many transactions have been done in the last week or two. Just that alone will let you know why MUDs is moving on up. They're making money, man. They got a 6% commission there. And the way I look at it is that's a 6% royalty for life on those cards. So they're definitely making some revenue there. And it's just on the trades, Spencer. So I think it's like kind of like you can start looking at MUDs kind of like a clearing house.
I wouldn't go that far.
You can look at it as a clearinghouse. It's not that it is that, but what is it doing? Essentially,
they're the marketplace for a lot of NFTs, I guess.
Yeah, they're part of. They partnered with Wax. They created a commission to make the money on every trade, and they created an asset that's being traded consistently.
Yeah. All right.
I mean, there's money there. The story's there.
All
story's there for sure. How long does this ride up?
Okay.
I mean,
here's one that looks interesting to me. T-Mobile. They had earnings this morning. They're up on that. But look at this daily chart. It's just sitting pretty. All right, I'm getting the view up off. Sorry. Sitting pretty here on the daily. What one of those highs from January, right? Like 135-ish. We are knocking on the door. Let's go to a weekly. Oh, we're knocking on the door. Some serious resistance. So what does that mean? It means you lean on these levels, right? Like if you want to sell, you sell into these levels. If it breaks, you get the hell out. And if you want to go long, you wait till it breaks. And then you hold on for the ride. But this is some serious. Look at that. Daily, weekly, and monthly resistance. And we are right there. I would watch this one very closely.
Diginex doing a big rip, guys. Up now 12%. Highest gainer on the watch list that we talked about this morning.
What is?
Diginex, EQOS. Nice rip there. And like we talked about, they released that catalyst. They had that upgrade this morning. And not looking too bad. At least starting the day.
All right, Jeff Warren's asking about Frog, which I have not looked at in months. How is J Frog doing?
J Frog.
They have earnings tomorrow after the close. Ooh.
I'll tell you right now, the heat map is looking a lot better than last time we traded. Spencer, I don't know if you remember that heat map was just pure red. So now we're starting to get some green with the bigger names: Google, Microsoft, Google, Facebook, Baba. Banking services are up. Computers, semiconductors, also even some commerce up.
God, J Frog, growth stock, so out of favor, so punished.
Yeah, I think this one looks like that other one.
I never even knew what this company even really did. I'll be honest. End-to-end hybrid universal DevOps platform. Oh, this is like I'm pretty sure we use this actually at Benzinga. I'm pretty sure our devs use this. I'll have to ask.
That J Frog, bro.
Pretty sure.
Know about the frog, guys.
I'm pretty sure we use that. We still have to make the basket of company of stocks that Benzinga as a business uses the most, because I'm pretty sure that'd be on there. So would Upwork, and somebody asked about Upwork earlier. Upwork would have to be on there as well. How is that doing today? UPWK. Bang, down on their earnings report from, when was that? That was overnight. Earnings overnight. Yeah. Says it right there. What else? Keeping an eye, going back to my scanner. What's up? What's down? What jumps out to me? What is going on with that? NMRD? Super low market cap. Yeah.
Got a little pump there.
Got a little pump today. Little bit of a pump. What else jumps out to me?
Where's that? What was that ETF, Spencer? That was for the shippers.
BDRY. B's and boy.
Oh yeah, BDRY.
Dude, Tupperware is still running. Tupperware is going to hit 30 today. That's my prediction.
Tupper.
Tupperware is still,
Tupper.
Tupperware is still going.
The Tupperware, man.
Gapped up in the pre-market, still up. They shook out some people in those first few minutes, and now we're going to the moon in TUP right now.
Now we're going to the moon, guys. Going to the moon. You guys hear it there?
Yep. Oh, speaking of moon, gotta check Doge. Okay, hanging out. BDRY though. That was the shipping, the dry bulk shipping futures ETF.
All right. Looks like we're getting some
God.
tickers mentioned there. There's a reason why I brought it up.
Now look at this thing, and
There's a reason why I brought it up.
Don't like this. This is an ETF that holds futures. It's not as straightforward as just owning stocks, right? There's some rollover involved. I don't entirely I just haven't taken the time to like really truly understand this ETF and why it's going up like this. But every time I look at it, it's gappy all over the place. This is, in some respects, it's ugly. In other respects, it's kind of unbelievable.
That it is.
Mick, it flies all over. Absolutely right. There's just gaps everywhere. There's no.
That's what happens when you trade that ETF life, man. There's a reason why I sometimes stay out of them, is that they have a lot of times these gaps, and it's just harder to trade. But it's one of those that you have to understand that you're getting some diversification, and you have to get it off support. So one of the things that I would use for something like this is what we always look at. So you use kind of more of a weekly or monthly chart. I wouldn't use a daily chart. I'd use a bigger time frame so I can make sure that I'm off the support.
There's a weekly, look at the monthly. Jeez.
Look at that monthly, dude. That monthly is ridiculous. So the monthly shows no pullback, so it's kind of like,
I know but the monthly doesn't tell you the real story.
Yeah, the weekly will tell you.
You wake up one day and you're down like 15%. You're like, what the hell?
Yeah,
I didn't do anything.
The diamond hands need to be real on this one. Let's just say. Your paper hands, man. The paper hands don't last on stocks like this.
This is not for me. Dupre's asking if it's overextended. Hell, I don't know. I thought it was overextended a month ago. What do I know?
Hey,
no idea.
Got to. It's looking like I need to hang out in happy hour for Benzinga Pro. Looking like someone's mentioning that Ryan Faluna was all on top of ASO. That's what I like to hear, Ryan. Shout out to Ryan. That's my man right there. That guy's always working hard, always telling me to get 2% better every day. It's the only way.
Oh, you know what I want to bring up right now? Intraday chart of Tesla. Let's go to a 1 minute chart of Tesla today.
The uranium hands? I haven't heard that one yet.
Look at, is there news on Tesla today?
Is
there a headline? That's an interesting chart.
Is Tesla moving?
It's always moving. When does Tesla not move? I guess in the grand scheme of things, it's only like 0.5%. So, but in terms of dollar amounts, it's moving.
Yep, it is.
Heading straight towards the low of the day for whatever that's worth, which is actually right in line with, well, what was the close? The close was 673. So,
all right, let me see what's moving out there.
Go back to what else? Peloton getting tattooed.
Yeah.
Big time today.
Let me see what's going on with some of my story stocks here, guys. So
Peloton is getting tattooed down 5.5% and falling.
Yeah, they're gonna have some trouble, man. My VZIO is not looking too bad today. I'm gonna take a look at that.
There is some news though. There is some news on Peloton.
On PT?
Yeah.
PTON. Let's take a look here. Oh, that does not look good. Spencer, look at this.
What? Yeah, no, I know. I just had it up.
That's a scary looking chart there.
I'm seeing there was a. Hold on a second.
Is this from the?
I'm trying to understand.
I hope it's in the lawsuit.
No, it's about the recall, but I'm trying to understand what.
Oh, there it is.
What it is. Okay, so they did announce a recall. This is from the CPSC here. This is from today. I bring up my screen. So this is from today. So they did announce a recall of Trade Plus treadmills, which is didn't Peloton say they had no intention of doing that? All right. Well, here they are. They did it. They recalled some of their products. Again, as I said at the time, I don't know if like this is a problem that's unique to Peloton. This like all treadmills are dangerous for kids and for small children and small animals. I don't know if Peloton is any more dangerous in that regard.
Can you say maybe bad parenting?
Yeah, I mean, yeah. This isn't a Peloton problem so much as it's like maybe like an individual household problem. That's just my opinion.
Yeah, my opinion too. I would have to agree with that. But you know who brought this stock up, right? Spencer, we got to give a shout out. It's always about where the value is. The value really here is not that Spencer and I know about Peloton, but that Edwin Dorsey on our short report actually talked about this. He was
very bearish. He was very bearish Peloton. He called out the fact that the company said they had no intention of issuing a recall when he said that was really weird. I guess I'm inclined to agree. I'm sort of on opposite sides of this one, but for the moment, he is right.
Yeah, I got to give him the shout out, Edwin.
Yeah,
shout out to you, big man.
Props to Edwin Dorsey, who's on the stream Monday at 4:00. Said he does not like Peloton for right now, and he's been nothing but right. He's been nothing but right in the 3 days since then. So,
all right, guys, you guys want to know how to attack this on the short side? We don't talk about this enough, but all right, so I use the VWAP, but it's called the VWAP fade trade. And so one of the things that you got to understand is where's the resistance, right? And so first things first is draw your resistance, because if you don't draw your resistance, you don't know what your out plan can be, right? And so the VWAP has been really coming down. We're looking for this to come back to VWAP here. This is actually a trade that is done by a bunch of different people. Some people do it from the bottom to the VWAP. Some people do it from the VWAP going down. And so if you were going to the VWAP, you would be buying it to the VWAP. That's called the mean reversion kind of trade there. And then what I'd be looking for is a pop back towards kind of this high right here or low right here to create a resistance there. Let's say 94s, and I'd put out a short order at 94 and then understand where my risk is going to be. Is it going to be 94.60s? Because I can't risk all the way up here towards 96.78. So I'd stick a little closer towards here, probably this 94.60, this high right here, and I'd go off of that, looking to get it at the VWAP. But as you can see, it's really getting pushed down. It's getting held down.
Yeah.
And if we let's take a look here at the level 2, see if we can see it come right back up. One of the things that I think we don't talk about enough is level 2. Let me see if I can make this bigger.
It's hard. Like there's value in level 2, but it's hard during the day, in my view, because as far as I can see it, like when you're trading intraday, you're trading against bots and algos, and I think the level 2 doesn't provide nearly as much value now as it used to in that regard.
Yeah, I agree. The only way I look at level 2, guys, and I'm looking at level 2, is just to find the big orders. I don't care about anything that's like, let's say, going through the time and sales at 100. Do you see how the time and sales shows here 100, 100, 100, 100? That's that algorithmic volume there. And so one of the things that I look for is the big orders. Let's say 1,000 showing up here, 10,000 showing up. Those are the ones that I really want to pay attention to, because that can at least give me some insight of where the big buyers and sellers are. I don't want to be going against those guys. So one of the things that I'm looking for is in here in Webull, you have this kind of like little spikes, this little chart. Whenever you see these spikes, that's a big buyer and seller at least lining up in order there. And it doesn't mean that the order is going to get filled, but at least there's a big order there. And so that's what you start looking out for. These bigger bars that are standing out, those are the ones that can really change the stock price.
All right, we just turned red here for a brief moment in the S&Ps. We are red in the Dow and the Russell.
Oof.
NASDAQ is green, still green for the day for the moment. I mean, I'm looking at the futures. Maybe I should pull the indexes up. Let me get the ETFs up. Actually, let me get the,
get that going. Get that going.
let me get the futures off here. But yeah, we are.
The SPY's been scaring me lately, guys. I said it on Money Mitch. Is this a market crash, guys? This is a market crash. What are you seeing, Spencer?
Crash? What do you mean a crash?
Hey, I mean, one of the things
Crash?
is
What are you kidding me?
crashing down, man, and topping out.
A crash. We're 5 points off the all-time high.
Not right now. I'm talking about is this the start? Is this the start? I mean, those are very trouble signs there at the top.
Oh my God.
You never know. You never know.
I don't know if it's a crash. I'm going to go out and say this is not. Like,
there you go. There you go. We got a little bit of a lunch bet there.
Like the market could go down. That doesn't make it a crash. You know what I mean?
Mm-hmm. Yeah. Yeah. Correction. We're due for one.
What I think is far more likely is we just go like here. You know what? I'm gonna pull up a chart of SPY. I'm gonna go back to like 2 years ago. Give me 1 second. Yeah, here we go. So what I think is this is a weekly chart of the SPY. What I think is far more likely, not that we go down, that we sort of like do this, where you got from January 2018 to call it April 2019, a year and change. Market went down in that period, but if you look just overall, really just flat for a period. Or if you go past that 2019, right? 2019, you go like July to December. Just nothing. Just like, yeah, there was that dip there in July that year, but just nothing. Just sideways action. That's what I think is far more likely. Just sideways action for here. Let's go back even further, right? Look at 2015, right? Look at like March to August. Just sideways action. Actually, even go to 2016 too. That's what I think is more likely. We just go sideways. And of course, I'd rather see that than go down. But I just can't see us really going down that much for a number of reasons. I mean, Fed, right?
Well, the questions I really have is the questions that I have is does growth really start driving this back down? Because I think growth really pulled back there, but hasn't affected the overall market.
Right, because there's been rotation into things like industrials, things like materials, things like transport. So it's a good question. Don't know the answer. But so maybe what would drive the market down is if the hot sectors, transports, industrials, if those cooled off, where would the money go from there? Would the money go into like super safety utilities and consumer staples, or would it leave the market? That's the question, right? And I don't think it would leave the market. I think it would always find somewhere to go. Nobody wants cash right now, as evident by Dogecoin. I think that's an embodiment of the fact that nobody wants cash. Collectibles market's on fire. Nobody wants cash. So if the money were to come out of what's been hot, which is transports, which is industrials, which is steel, manufacturing, if money were to come out of there, where does it go? Does it go back to growth? Maybe. Or does it just go somewhere else? Does it go to utilities? Does it go to retail? Does it go to the banks? Actually, if you look at the XLF, banks are doing pretty good right now. So does it go into like healthcare? Everything is actually it's hard. They're all at high levels here.
The question I got for you, Spencer.
Does it go into real estate? That's everything is up so much.
Do you think we are overheating?
Overheating, like in what sense? Like there's clearly a lot of money. Like the system is flush with money right now. I am always trying to take a longer term point of view. So even if like I was terrified of a crash, which I'm not, but even if I was, like, what good would it do me to sell? I'm always focused on the long term, right?
Okay, if you're focused on the long term, here's a good question from Christian in the chat.
Yeah.
So Christian's asking, what are the good sectors to be in when the rate hikes come in?
I don't even. So when is that going to happen? We don't even know when that's like they're not even thinking about it. Like
Yeah, pumping pals, like it's not even on the the table.
Yellen just said 2 days ago that like she sort of hinted at that it might rate hikes might happen, and the market freaked out. So I think we're so many years away from that. I don't even know if it's worth. Okay, so wait, what do you buy when rates go up? You look for defensive sectors, right?
Mhm.
Don't go to the cyclicals. Look at defensive. But we're so far from that I don't even know if it's worth like going there, because first they have to think about thinking about it. Then they have to think about it. Then they have to do it, right? And Christian, to answer if you want to go back and look at the market in 2015. First rate hike since the financial crisis happened in 2015. I think it was 2015. I think it was fall 2015. That was the first rate hike since the financial crisis. And go back and look what outperformed that summer, that fall, and that should give you some idea.
One chart that I take a look at, and I think a lot of people, and I think Spencer, you and I have talked about it, is the ARK Innovation ETF, and how I'm really viewing that as the overall indicator for growth, right? And you got the support, and it keeps testing down, guys. It's not testing on the upside; it's testing on this downside look. So that's what concerns me. If you see this kind of just really tank down, I mean, there's a lot of stocks that a lot of people are holding are in this ETF. So there's going to be a lot more bag holders than just Kathy if this breaks down through the support.
Yeah, that's a really good point. Someone just dropped a ticker in the chat. There are many stocks that I'm like eyeing to buy right now, but here is one. It just got mentioned. Raspy W. Okay. I am eyeing this one like a hawk. I very, very much want to buy it. This is IPOE. Is ticker. They haven't completed the merger with the SPAC yet, but I assume they will. I'm waiting to see if SoFi gets a bank charter. If they get a bank charter, I'm in. I think this company is the future of financial services. I think SoFi is a beast, and I'm not in yet, but I am waiting. If it starts to make a run, I'm going to hop in for the ride. So it's, sort of in this weird consolidation period right now where it's not going down quite as much as a lot of other SPACs, but it's clearly not going up either. So I'm waiting. I'm waiting for the bank charter. I don't know when it's going to come out, but what does SoFi do? What don't they do? They do everything. They do everything financial services. They do lending. They're encroaching onto like every area of financial services. They do crypto. They do investing. For sure, they have a robo advisor as well. But they cut their teeth on lending. They have credit cards. Yeah, I think banking products. I think they are just a beast of a company. Every time I've like come upon them in the past few years, they're getting bigger and bigger and bigger. So did they get bought at a ridiculous valuation? Maybe, but I think this company, whenever I turn around, they've got a new service, a new product. I've heard very, very few bad things about this company, just from a consumer point of view. And I know they're getting into crypto. And no, ticker is IPOE. IPOE is a SPAC. It's a SPAC. It hasn't merged with the SPAC yet.
Do you want to see here a chart that's similar to that, but something that I think is a huge value play that was completely missed by so many traders?
What?
SLM.
I don't know that one. SLM? Oh, Sally Mae?
Sally Mae, man.
Oh, Jesus,
this is the college play. Look at this. Look at this monthly chart. That's a monthly chart.
This is the federal.
This is education. Those
federal loans, right?
those federal loans, and what this move bases on is really the thought that there could be potentially kind of a credit going into education that would pay out a lot of these loans. And I think that, hey, this is a value play in itself. I mean, look at this chart.
Yeah, I'm sorry, I stand corrected. Not a federal loan. They used to service federal loans, and now they do private loans. I haven't looked at this chart in a very long time. So thanks for bringing it to my attention.
Yeah, man, this is one that I wish I would have had. Look, that monthly chart tells me it all.
Yeah. I don't know. Part of me thinks like if loan forgiveness comes, I guess loan forgiveness may be a bullish thing for them.
Ooh, look at bets.
Because it means more loans. I don't know.
Bets. ETE BETZ. This is for those sports betting plays. It's looking like a little bit toppy there. We'll see what happens in that, but definitely a little toppy. Chart that I wanted to take a look at. I know that everyone's still waiting on when's the bottom here for coin. When's the bottom for coin? I know that a lot of people are thinking maybe 250s. What do you think? What are you thinking there, Spencer?
What was the reference price? I think 250.
Yeah, at least that's why I'm calling that number. It stands out to me.
Somewhere.
I don't know if I'm just wrong or.
I want no part of this. I want.
No. And people were buying it on day one. I think it was Kathy that bought it on day one, right?
She bought on day 1, 2, 3. She's been buying.
Oh, good Lord, man!
I say I want no part of this. I probably own this because I own the. I own the ARKW. So I probably own this. But as an individual stock, I want no part of this.
Yeah, it's going to be something else. I'll definitely take a look. Someone's bringing up Gamble in the chat, so I just want to take a look at that one. We actually had the CEO on our kind of power hour. So let's take a look. Definitely pull back. I think you're seeing esports here getting that big pullback. It did get this pop up, but let's see if it can hold that low, which was 11. It tested it yesterday. 11 is going to be really the line in the sand on the downside.
Okay. I'm going back to my movers tool just to take one last look. But I do want to hop off the stream in a few because I want to give Mitch time to prep for SPACs attack. Which
yes. We're wrapping up. We're going to be doing SPACs attack, guys. If you guys want to see some NFT openings, we're gonna might be opening some tops. Chris isn't feeling the best, so it's gonna be a lot of me on the show, guys. So stick around.
Do you need me to hop in with you?
I mean, I think we will be fine. If I do get Chris to completely hop out, then maybe I'll give you a holler, Spencer. Like we always do, we help each other out. We definitely keep each other going. But definitely let's keep going. Let's keep going, guys. Here's a one that I've been giving out. This was one of my early story stocks, guys. PLL, keep it on watch, guys. Lithium stocks. When do these come back into play? I'm definitely keeping an eye on these. ETF you guys can watch is LIT. I think you wait to see that one really get a nice reaction. Then you might see a run. Another play in here is the MP play, MP Materials. This one's another good play to play in that one. I'm definitely going to keep an eye out on those. This is what I try to do, guys, for Money Mitch. I try to give you guys those stories and then give you some certain stocks to watch out in that industry. And then we can keep a watch on the news flow, see when we get that pop. And I think it's important to definitely keep an eye on that.
Nice arg. Disney is asking Disney or Netflix if and when the dip comes. Yeah, if we get a dip in Disney, I'm buying with two hands.
That's the number one stock, Spencer, I've said that in
before.
2020.
I've said that before.
When the crash came, I was telling myself 90s. It got there.
It got to 90.
I didn't buy it.
Got to 98, I think. Yeah.
Yeah, I didn't buy it.
Okay, it got lower than that. This is a forever stock. My grandkids will inherit my Disney. I will never sell it.
It's an important stock to have in the long term.
I'm not the best person to ask because I'm just not going to say I'm hodling like forever. So I'm not.
Throw it up, Spencer. The diamond hands on the Disney.
Yeah, that's me.
I can't blame you. Really, it's when you over time, and I mean Disney Plus really took off. I mean that's what's going to keep the growth going over the next couple of years, I think. And then long term, they're definitely going to keep making bigger moves. What do you think about Disney Plus? Do you think it continues to drive the stock?
Oh man, I kind of hope not, honestly. Because the more the stock rips on Disney Plus, then the more people start talking. Oh, is it overvalued? Is it overvalued? Probably, to answer your question, probably not. Only because we are reopening. Disneyland is open finally. Disney World is open. Theaters are reopening, making movies again. So that's all going to come back into play. So I don't think it's just a Disney Plus story like it's been for the last year. But I'm long term bullish, not for any of that, mostly because it's like the IP that they have, and we've seen there's a gajillion ways to monetize IP, whether it's NFTs or something that hasn't been invented yet. And who has the most IP? It's Disney. So that's really the reason for that. But guys, if you liked Mitch and I hanging out, just kind of shooting the shit, smash the like button. Let us know what you think. Again, we're always looking for more live traders. If you trade, if you want to, broadcast your trading, hit us up. Shows at Benzinga. Here, I'll bring it up on the screen. Shows at Benzinga.com. Send us feedback there as well. Goes to the whole producer crew here at Benzinga. That's going to be it, I think. Smash the like if you haven't already. Thanks for hanging out with us. We appreciate you. SPACs Attack. Here, let me put the calendar up. SPACs Attack up next. Power Hour at noon. Get Technical 1 at the close. Ryan Rosebiani, Money Mitch, and Aftermarket Therapy. That's the slate for the day. Mitch, any final thoughts for us?
Yeah, guys, like always, what I always talk about day trading is understanding the risk management and understanding your reward and risk process. Understand how to keep the mathematical advantages in your favor because it's so important. And that's why I always come back to the mathematical probabilities because you never know as a trader when you're going to be right or wrong. You really don't. I mean, if someone wants to tell you that they know that they're going to be right, I mean, I can tell you right now, you can ask Dennis Dick. No one ever knows. The only thing you can do is set up the plan and know your out plan, know what reward you want, know what risk you're holding to. This is so important because if you don't stick with the mathematical advantage, then you never will go ahead and have a true system. What you'll be is kind of that uncontrollable trader with which sometimes you risking, let's say, a little bit too much. And what that does is that eventually on a trade that you do well in, you're going to end up destroying it because you don't understand your risk management and your probability in trading. So if you are a day trader out there and you notice that you're having trouble, ask yourself, am I really keeping the mathematical probabilities in my favor? And do I understand my personality in trading? Take data. And I can stress that often, guys. It's not only when you get in or out, but what were your mindset and did you hold to that reward and risk? Because sometimes you're going to go ahead and cut that loss a little early and then you see the stock go up and it actually goes in your favor. Sometimes you're going to not take your reward that you set out to. And then that's when you go ahead and you look back at your trading and you're like, man, I should have taken that reward. So a lot of times, definitely take down your thinking also in your data, and then you're going to start seeing some advantage. I can't stress this enough, guys. If you do these steps, you guys will see some results. But it's up to you guys to make the move.
It's in your hands. All right. Happy Cinco de Mayo once again. We'll see you guys on SPACs. Mitch, I'll see you in a few.
Peace out from the guys.
Peace out, everyone.